Good morning. All right, let's go around the horn and see what is looking good. Everything is higher this morning, most everything. NYMO finished at plus 35. We had down volume at the close, 3-1 on the New York Stock Exchange, 2-1 on the NASDAQ. That looks different this morning. VIX is lower. Let's see. Productivity, labor came out at 8:30. U.S. trade imbalance, U.S. ADP, employment change. About 27,000 below estimate. Futures are higher. Everything looks good. Looks good. Looking good. All right. Netflix up 450. Nvidia's up $6.30. Took a credit spread on Nvidia. Probably going to do something on the long side. The credit spread's long, just a different way of trading along. Bitcoin, watching that following through. Trading at the highs. Bitcoin is testing the highs. Apple's starting to get some traction. We've got 7 minutes to go. 7 minutes to go for the opening bell. Let's see. Bank of Canada. Got a 10 a.m. Some news there. Canadian PMI at 10 o'clock. We got gasoline and oil, crude inventories, distillate inventories at 10:30. And then we don't have anything else the rest of the day. So relatively quiet day. Still think a bid into year end is likely. The strength persistent. Okay. Tesla's up 460. New York FANG going into the open. New York FANG index going to the open looks really good. All right. All right, let's get ready to go. First 15 minutes, I'm not doing much of anything. Oh, it's only 5 minutes to go. I thought it was I thought it was 9:29. All right, let me grab a cup of coffee. I'll be right back. Good idea, Jason. All right, we got 2 minutes to go. 2 minutes to go. Bitcoin's about to go. Looks like Bitcoin wants to go again. All right, so your New York FANG stocks, those top 10 stocks looking good. Okay, we are about to open. Less than a minute to go. Good luck, everyone. And that's the opening bell. Let's see how we're looking here. How we doing? Airbnb. Coming out of a squeeze. Airbnb. C3AI. Extreme high tick alert. Amazon. Following through. ARM Holdings. Trying to break out. ARM Holdings. Carvana. It looks like that wants to follow through. GitLab yesterday on CNBC. Looking good. Home Depot. Home Depot's coming out of a squeeze and higher. Okay, IoT. Mara looking good. Mara.
Extreme high tick alert.
Looking for it to break higher. Take out yesterday's high at 16 and change. Monday's high is about $16.40, something like that. NVIDIA, nice bounce. ALK, Alaska Air. Alaska Air, bullish day 3. Okay, let's look at ALK. For the last 3 days, this one's bounced. Hammer on the news that they were considering buying Hawaiian Airlines. NVIDIA looking for the break higher. After some profit taking, there goes Royal Caribbean. Royal Caribbean breaking out. Royal Caribbean is going. Here goes Royal Caribbean. Big move on Royal Caribbean. RCL. Looks good. Big breakout on the daily as well. Okay, SPY is at the highs. Royal Caribbean. Okay, looking good. All right, so far we got a nice start to the trading day. Okay, so far so good. All right, let's take a look at the FANG stocks. Look good. A little fade, a little profit taking. Snowflake on the move. Snowflake going. Plus $1.74. Nvidia's up roughly $7. Consolidating at the highs. Nvidia. Wait for the consolidation after the pop. S&P fading from the high this morning. Banks doing well. Real estate breaking higher. Vornado pushing higher. Wells Fargo trying to get above 45.50. Wells Fargo, JP Morgan, Goldman Sachs, Morgan Stanley. Looking for the banks to continue. Okay, nice open. Nice open. Okay, so back above 45.73. 4,600 is the upper level that you're aware will be resistance. Apple bouncing, Bitcoin a little fade. All right, first 15 minutes, I'm not doing much of anything except taking some potential profits off if warranted. Some of these gap ups looking good. Mara trying to break out. SPY still fading. Just profit taking for now. Let's see if we get a trend after 10 o'clock. ADP numbers. Home Depot looks good. SoFi breaking higher. SoFi breaking higher. Alaska Air. I'm going to put that follow through. ARM Holdings trying to break out, still consolidating. Amazon, same thing, trying to break out, consolidating. Apple, a little profit taking at the open. Royal Caribbean still looking very strong, looking good. S&P still fading a bit. 4,600. I don't see us getting above 4,600. All right, stocks, a little bit of profit taking, waiting for a trend, either a fade or we stay in this area. Home Depot looking good. Home Depot grinding higher. Okay, here's Home Depot. Looks good. S&P 500, just below that 4,600 level. Okay. Does look good though. RSI is still hanging out near 70. That's strong. New York FANG index. Survey says. All right. So remember, we were looking for a second day bounce. Stocks like Microsoft, I'm looking for a second day. Okay. So far, see resistance, NVIDIA. So far, we're getting rejected. A little profit taking. It's too early to tell what's going to happen today, but need to see that solid bullish follow through. Apple. Okay, a little fade there on Apple. Amazon. Okay. Netflix. Okay, Netflix looking a little better. Google. Nice support on Google at the 130 strike. In the Gamma update, Brett was talking about the FANG Magnificent 7 and those support levels. As options build in this area. All right, Tesla, looking for the follow through on Tesla. Frano saying that there's a rumor they're going to increase their Cybertruck orders. That the Cybertruck orders have increased. Tesla. Okay, Tesla, here's a good example. So far, stochastics turning, MACD's above its signal line. Volume was above average yesterday. If Tesla can follow through on this, we should be good for 268 to 270. Vornado Real Estate. Vornado trying to break out. All right, let's see what is actually moving the markets at the moment. Let's see what sectors look the strongest. Currently, survey says we have 90% of sectors green. All right, it looks completely different than yesterday. Big difference from yesterday. Stay away from energy, it looks like, but everything else looks pretty good. Energy. NVIDIA starting to fade. NVIDIA. NVIDIA. I'm out the credit spread. Nice profit. Thanks, money. Okay, so we're looking pretty good here on the, for the most part, Google, Meta, Apple, Microsoft, NVIDIA. NVIDIA fading a bit. All right, Royal Caribbean, nice follow through. All right, so far so good, looking good. Little fade, looking for this fade to get bought. What's Bitcoin doing? Bitcoin 44,188. S&P. Okay, so far we're just waiting for the markets to settle down, give us a trend. Let's go 15 minutes. Right now we're just sitting above support, right below resistance. Cruise lines following through. RCL. RCL 105, 100.
High tick alert plus 800.
All right, looks good. All right, so we're coming into 9:50 a.m. We haven't faded the gap too much. We're still hanging out up here. Still too early to tell, but pretty resilient. Pretty resilient. Just waiting for 10 o'clock. Reassess the markets. Looking good.
High took alert plus 800.
Okay. Coming into 10 o'clock. Our trend looks good so far. Stocks are holding up. Bitcoin still hanging in there at the highs. All right, come on, let's hang in there. It looks like a bear flag for now. So if you look at the pre-market action, the way this dipped a little bit, if you look at the 2-minute chart, you can see what looks like a bear flag. Need to get above VWAP or just flatten out and not go anywhere. That's fine too. S&P. Okay. Can't believe the holidays are upon us. All right, Cigna Jewelers. Cigna was mentioned by Buford yesterday or the day before. Wow, nice move on Cigna. Nice move. Congrats. All right, Royal Caribbean is definitely going. Okay, Bitcoin just consolidating. All right, Royal Caribbean is on the move, looking good. The FANG stocks so far fading. All right, let's take a look at Royal Caribbean, RCL, and Carnival. Those are doing well. RCL. All right, here's Royal Caribbean Weekly. You can see we're breaking out. Very clearly breaking out. Volume looks good. Starting to build. Would love to see it like it was back in July, August of last year. Volume picking up, but it's looking good. The bookings, future bookings, deposits all rising. Our Microsoft no follow through. Meta looking like Meta's been off lately. That's probably a better play. Okay, so we got 3 days where we haven't dropped off. Stochastics is oversold, so that's good. Apple. What was it we said was oversold? Was it Google? Google was oversold. Yeah, oversold. Stochastics looking for a follow through. All right, so we got to get above the 50 days. So that means we're going to have to give up about $2 to be safe. If you don't mind, and we get a follow through today, you just know you have resistance overhead about $1.50 higher. So if we can manage to get a trend going like yesterday between the open and 11 o'clock when we peaked, if we get something like that going, I don't think we will, but looks like a doji. If we get something going, Google might be a play. All right, Snowflake on the move. Snowflake. All right, this looks good. Snowflake, VWAP up and to the right. Snowflake looks good. I have a credit spread on Snowflake. Wow, CVS looks really good. CVS Health. Rivian spiking. All right, so Rivian to 18. Figures, I'm completely out of my Rivian. Okay, it looks good. All right, Rivian looking better. Okay, Tesla just below yesterday's high. If we can break out, watching Bitcoin. Bitcoin could take a break. It's not a big deal. Snowflake looking good. Snowflake, day 4 after earning, day 5 after earnings, sorry. Day 5 looking for the trend to continue. Looks good. Let me enable a 5-period moving average. Let's see, 5 EMA. I know Scott Redler and a few others use a 5 EMA. Okay, that looks good. Rivian starting to motor along higher. Home Depot at the high of the day. Home Depot looks good. Home Depot trending. Home Depot trend intact. Rivian. All right, it's Canadian PMI. A. Okay, Apple. Okay, Apple. Mhm. All right, Bumble. Nice little bounce on Bumble. A little bit of selling here, a little fade more, a little bit more fade. Yesterday was kind of boring except for Bitcoin. Okay. All right, SPY fading some more. S&P fading. Still looks like a bear flag that's breaking down a little bit. Now, if VWAP continues to move sideways and we just chop around today, we do have support and resistance in this area. 4,600 resistance, 4,550 is support. We're above 4,570, trading 4,580 at the moment, so not too bad. More fade. Home Depot going. Home Depot's going. All right, it goes Home Depot. Alaska Air. Straight calls on Alaska Air. I have no position in the S&P or the spiders. Hope everyone's having a good morning. It's a little after 10 o'clock on the East Coast. Alaska Airlines continuation on the third day. Alaska Air. That one looks pretty good. Alaska Air, ALK. This one gapped down on the news that it was thinking about buying Hawaiian Airlines. I don't see any updates. But we have a hammer and a follow through. Big volume yesterday after some selling. All right, Alaska Air still going. Looks good. Okay, looks good. Alaska Air. Looking really nice. Alaska Air, let me just check ATR on that one. Alaska Air ATR is about $1. Let's just say $1.60. It's currently up $1.60, so we'll see if it follows through. Snowflake, looking good. Snowflake on finally a cycle on the daily cycle buy. on Snowflake. Okay, Snowflake looking good. All right, Snowflake. Snowflake trading 62% of its ATR, 59% of its daily range, so Snowflake could keep going. You see Grover updating small banks, small tech, biotechs. There's a lot of small biotechs as well, and small technology stocks looking good. So pay attention to IWM. That dipped yesterday, but following through. Nice head fake. Rivian's on the move. Okay, cool. All right, looks good. Looking good. Okay. Arm Holdings looking for the breakout. Now that we're into the 10 o'clock hour. Okay, looks good. GitLab, how's that doing? GitLab breaking higher. GitLab. GitLab on the move. GTLB. Mentioned that one yesterday. Pushing higher. All right, so nice bounce in the SPY so far. You know that we're most likely going to stay between 4550 S&P 500 and 4600. So any dips most likely get bought. That was the plan for this week. So shouldn't be surprised. We have a 0.65% implied move for 1 day. 1 day implied range is 0.65%. That's telling you that the ranges are contracting. Okay, Q support is at 385, 383, and 380. IWM is most likely going to be following through. Call wall resistance remains at 190. Support is now 185 and then 180 on IWM. So let's take a look at IWM. IWM small caps look really good. Okay, we got a nice trend moving the opposite direction. So you can tell what's being bought. Just don't buy the high of the day. Wait for a little dip. Wait for a little dip. Okay, the daily looks good. You can see that we paused yesterday on the right, paused and then followed through, taking out Monday's high. That looks really strong. All right, GitLab looking nice. So it's Home Depot doing Home Depot. Nice work on Home Depot. Following through, Home Depot looking nice. Home Depot supported 2.2 million jobs worldwide in 2022, creating 4 additional jobs for every associate. Wow, that's pretty impressive. The Home Depot supported 2.2 million jobs nationwide in 2022. What do they do in 2023? 2022, creating 4 additional jobs for every associate it employed. So that's pretty impressive. That's pretty impressive. Very nice. So far, looking pretty good on the open. Okay, Home Depot ripping there. Home Depot going. Home Depot is up 1.5%, $4.75. All right, looks good. IWM, I think that's the play. IWM is the play. Okay, looking good. All right, looks good. All right, Nio, Mio, Mayo. That had earnings yesterday, and it's starting to go now, so that looks good. Um, okay, Nio looks like it's going to break higher. Nio looking for a follow through. That one looks good. Thank you, John. All right, breaking down trends. Breaking a downtrend. All right, so Neo's on the move. Neo. All right, looks like the EV stocks are on the move. Let's see what XPeng looks like. XPEV. XPEV. Okay, nothing yet, but Rivian looking better. Clearing the 50-day and the 200-day. All right, we're fading a little bit more. Looks like IWM is the place to be. IWM. Vornado looking really strong here. Vornado. All right, let's take a look at Vornado. Real estate stocks. VNO. Breaking out. What about Boston Properties? Boston Properties. Breaking out. Jones Lang LaSalle. Breaking out. Airbnb. Survey says breaking out. XLRE real estate breaking out. Looking good. Okay, SPY, S&P fading a bit, but Bitcoin stocks looking okay. IWM looks good. All right, more fade on the S&P. Okay, so the real estate stocks look good. Jones Lang, yep, breaking higher. What's Costco doing? The retail stocks been looking good. Retail, Costco, Doji for now. Let's see what Target looks like. Target, okay, consolidating. Walmart has a dividend. What, tomorrow? I think you said, Corey. Walmart. Let's see. JWN, Nordstrom. Nope. Kohl's, KSS. That's okay. Let's look at XRT, the retail sector. Okay, it dipped yesterday. Consolidating, it looks like right below 67, 68. So cup and handle. So they'll wash out the remaining people who want to sell that get impatient, looking for the breakout. The depth of the cup is what we look for. It's about $10. So 77 to 78 looks like a good target. Once XRT breaks out, we got a couple of weeks for that to happen into year end, most likely. Let's see, Vornado. I'm thinking about taking some profits off, locking in some profits. B&O, weekly. Weekly looks like it's got lots of room. Vornado. I got January. Okay. Mm-hmm. All right, IWM falling off from the highs. Still looks better than the S&P at the moment. Royal Caribbean looks good. Okay, Bitcoin, watch the snowflake. Okay, we continue to fade from the highs. 455 is support. Okay, what's ARM doing? ARM Holdings. No follow through yet. ARM looking for the breakout. Home Depot at the high, just off the highs of the day. Home Depot. All right, let's see if they start taking some profits here. The shorts start to take some profits. Look for a bounce. NIO. Pause. It looked like it stopped right there at the November 20th high. We had a pivot high on November 20th. NIO. NIO, NIO. Okay, trying to change direction. NIO. Biotechs continue to look good. Biotechs XBI have a credit spread. My kids have credit spreads. We sold the 74 put and bought the 72 put. That's quickly making lots of money. XBI. Looking good. Looking for a bounce. Thank you, Corey. NIO. I took a position in NIO February 8. I bought the 8s, sold the 10s. Tornado looking good. Mara looking for this higher low to turn into a higher high. Get above 1650 or so would be nice. Bitcoin Still farting around here between 43,500 and 44,300. Okay, the FANG stocks are mixed. Apple pulled back a bit. Apple. Airbnb looking smart. Real estate stocks doing well. Here's Airbnb. Our nice breakout. These are all looking good. Let's see what the cruise lines look like. CCL, Carnival. Nice ramp. Look at the volume on Carnival. Grover took yesterday. Okay, Airbnb looking good. Airbnb going. Carnival, the cruise lines looking good. Okay, it looks nice. Looking nice. Okay, what is ALK looking like? Alaska Air following through. All right, into the gap, ALK. Booking is struggling. Thank you, Russell. Booking.com, BKNG. We've had a nice run. Consolidation. We got a quadruple top. BKNG daily. Yeah, that's weird, right? Travel industry had its first decline, yet all of the travel stocks look pretty good. Well, the airlines do. ALK is the only one I'm looking at, really. Delta Airlines. Delta breaking out. UAL. And look at the volume. Always check the volume. Check your price. Check your moving averages, but look at the volume. I pay particular attention to volume because it tells you a lot. Look at Airbnb. Airbnb. No, that wasn't it. It was what? Carnival. Yeah, Carnival. But I would like to pay attention to Airbnb too. Carnival. Look at the volume. That's institutions for the last few weeks. As this is rising from 13 or so, and it jumped above the 50 and the 200 day. Look at the 200 at 50 days actually turning faster than I thought it would. I thought it would be next week that we would get a 50 200 day cross. At this rate, we'll probably cross over on what's today? Wednesday, maybe by Friday. Looks pretty good. What's JetBlue look like? JetBlue, Delta looks okay. JetBlue, JBLU. That's grinding a little rounding bottom on JetBlue. UAL, ALK, AL, JBLU, SAVE. What's SAVE doing? Save. A little bounce. LUV, Southwest. Looks good. LUV, AAL, ALK, JBLU. Home Depot. Home Depot. More. Home Depot got more. Home Depot looking good. HD. Nice follow through. Look at that. Man, that's a beauty. That's a beauty. All right, I'd love to see the tech stocks pick up a little bit, but they're overbought. Still consolidating. Okay, Bitcoin just consolidating at the recent highs. That's okay. People were chasing. It's not falling off. People chasing. Moderna, mRNA. Yeah, looks good. All right, Walgreens Boots Alliance, does it chase CVS? Walgreens. All right, so we're starting to see CVS with some profit taking, so you don't want to chase. That looks pretty good. All right, Walgreens Boots Alliance, similar setup. Hmm. Okay, Home Depot looking good. Amazon can't seem to get out of its own way. Amazon. All right, looks like a bear flag on the S&P. I have to take a couple of minute break. I'll be right back. All right. Still a bear flag. Okay, looking for a bounce. Nothing yet. Nothing yet. Okay, so far, New York FANG index, the New York FANG index, we're still in a doji. 90 EMA's rolled over. 21 days still pointing higher. So we're just consolidating right now. Let me just clean this up a little bit. Clean this up. Okay, move that over. Move that over a bit. Okay, RSI is still above. MACD has crossed. Okay, and MACD, stochastics is starting to set up. Getting close. Still, consolidating the recent gains. We do know that generally the first week or so of December is not as strong. And then we start to build towards a bullish Santa Claus rally, second and third week going into the holidays. So right now, Apple's starting to turn. Apple, let's take a look at some of these FANG stock. Here's the weekly, New York FANG weekly, putting in a hanging man candle in the upper half of this range. The bottom of the range, the end of that 3-month consolidation. Pushed higher, broke out. So now we're just consolidating gains that we put in. 12% gains on the S&P from the October low. So, we have to give back a little bit of that, right? You would think. There goes Google. Google's starting to go green. Netflix is turning. All right, so shorts will start to cover, it looks like. No bounce, no follow through on the S&P. All right, so Apple. Okay, Amazon. Just looks like consolidation. Broadcom, Google, Doji. 3-day reversal so far. Microsoft sitting on top the 21-day. All right, so Microsoft we talked about, on Monday, we said that you could take a trade there, but I like confirmation, so I like to look for a second day. Once we have the second day, yeah, you give up a bit by not taking the reversal, but I'm looking for a push into year end. So I'm looking for how today closes on all of these stocks. We're at highs, so either we're going to fade more, which is probably the case, or we're going to hang out in this area. So that's Microsoft. Meta, 3 days along the 50-day. 50 days up and to the right. RSI is starting to turn. Stochastics is now oversold. So if you like Meta, this is a pretty good one with a tight stop underneath today's low. Maybe I'll do that. Let me take a look at Meta. Meta. Let's see what a credit spread looks like on Meta. Meta or a long Meta. So 200 days down there at 270. Let's see. Let's go to January. And let's look at, well, let's look at the 270. That's a way out of the money, but let's see what the options look like. 270, there's our dollar. Interesting. For pretty low risk trade, let's see, sell the 270, buy the 260, $10. No. All right, what about 280 looks good. Let's sell the 280. Let's see what that looks like. Sell the 280. Okay, so you can get $1 for that. $100 per contract. That's pretty risky though. That's pretty risky. Let's look at the 265. Is there a 265? Going once. 270. $10 strike. Oh, getting close to a better 280. 290? Yeah, 290. 290 would be a 290 is a 15 delta. I don't think we're going to get down there. Let's try sell the 280, 290, sell the 290, buy the 280. That's $120 per contract. I could do that. All right, we'll start with a few of those. I'm going to try a few of these Meta. All right, so I'm going to take this spread here. Meta. All right, I'm looking for a turn, so this needs to work. Let's see, 290. Okay, Meta looking for a bounce here. This looks pretty good. The thing I like about it is stochastics oversold. We had 5 days of selling volume. We held on to the 50-day for the last 3 trading days. RSI is turning, so this looks pretty good. It's not a guarantee, but it's sitting on top of this volume by price level. All right, Meta looking like it's gonna go here. I might take a long as well. SQ looks good. SQ. Just don't buy the high of the day. SQ looks good, along with AXP. AXP pull back 2 days. What about MasterCard, Visa? Okay, those pull back a little bit. Visa. Synchrony Financial. Synchrony Financial. Capital One Finance. I don't know anybody that has a Capital One credit card, but I guess some people do. Look at the volume. Look at the volume on Capital One on that run up. Okay, I'm thinking about a long as well. Not only the credit spread, but I'm also looking at Meta. All right, I'm thinking about Meta as additional trade too. This looks pretty good. Meta holding right here at the 50-day. Day 3 wicks underneath these 3 candles, RSI's turning. So it's early. After 5 days of selling, this looks like this could turn. All right, so it all depends on how it acts today. I got a credit. So let's see how much we get out of this today. If we do follow through, I'll probably take a long tomorrow, or maybe, later in the day. Big bank CEOs are testifying in the Senate for what? All right, watching Meta. Keep an eye on Meta. Still could consolidate more. Watching Stochastic. All right, Snowflake. Like to see Snowflake. All right, so we look all the way through here. Meta and Netflix. Netflix, the next one. Netflix oversold. It's probably going to be another couple of days. Could pull back a little bit more. Netflix RSI still resetting. Nvidia rejected lower high. Stochastics oversold. Doesn't mean it has to bounce, but it has the probability, a greater probability, now that it's pretty much oversold for what, day 9? What's this, day 10, I think. Day 10 on Nvidia. Most people are anticipating that the markets will pull back. That's good. We're not too crowded at the moment. The trade's not too crowded. All right, what's Bitcoin holding up fairly well near VWAP? Uber expands its delivery with a launch of courier pickup. Ooh, that's interesting. That's very interesting. Uber. That's pretty interesting. Uber looks like it's going to keep going with the news that Uber testing 60 are looking for a SPY, S&P to turn. Meta looking for you to turn too. Okay, ARM Holdings drifting a bit lower. Royal Caribbean, 60-minute, building another 60-minute candle green for now. Airbnb, second bullish 60-minute candle, looking good. Airbnb. Okay, most sectors are green. NASDAQ 100. We have mostly green on the NASDAQ 100. About 70% green, 30% red. The top performers are Lucid, Moderna, DocuSign, Illumina, and PayPal. PayPal is up 3%. Moderna is up 6%. AAOI, Applied Optoelectronics. Nice. It's up 11%. Nice one, Edmund. Cup and handle breakout on AAOI. XBI continues higher. XBI, biotechs. Vornado, just off the high. Mara. Okay, S&P is still sitting here. Bear flag. No follow through. IWM fading from the high. Little shooting star action there so far. Home Depot consolidating at the highs. Home Depot. Nice pop. Home Depot. Come on, Meta. You can do this. NIO. NIO pop there. Yeah, Captain, the 30-year mortgage. Good for home builders, real estate, small caps. I hear doors closing. Nobody's home. Nobody's in the office. Okay. You know, you're a banker, right? You're a big bank like Jamie Dimon, and you got Senator Robert Menendez from New Jersey questioning you. Like, how do you take this guy serious? I'm not into politics, but man, he's been into so many problems. But he's a politician, so politicians get away with a lot of crap, right? Makes you crazy. Not you, though. Better not do it. Anyway, it has nothing to do with trading. I'm sorry, I get sidetracked on politics. I happen to look at Bloomberg and they're grilling the big bank CEOs. They could have picked a better person, though. All right, NIO looking good. Mio Mayo. Meta. Trying to get Meta to turn the corner. Airbnb. Airbnb stretching its legs. Airbnb high of the day. Yeah, FIBN. Rocket Mortgage. Is that Rocket RKT? Yeah, they should do well. Rocket. RKT. Let's see what the option volume looks like here. RKT. Let's see what the puts look like. Put side. Puts. Yeah, lots of puts at the 10 strike. Got weird strikes here. $8.99, $6.99. So they must have had a split at some point. Let's see. January. Let's see what January. Yeah, options aren't that great. All right, SPY turning the corner. FIVN, FIVN. I like it. FIVN. That had earnings this week, right? All right, Bounce is getting bought. FIVN. 5 FIVN. 5.9. Deutsche Bank raising his price target on 5 FIVN. Yeah, FIVN looks good. Overbought on RSI. Stochastics could still fade a little bit. I like it though. Looks good. Uber, 245,000 at 59.70. Somebody bought at the bid. Uber Red is at the bid. At the bid, we got Uber, several blocks here on Uber. Okay, looks good, Uber. Uber. Yeah, Uber looks like it wants to break out. Uber definitely looks like it wants to break out. Going now. Uber. Uber looking for the breakout. Uber. We got several blocks on Uber. Uber, check the blocks. I'm really going to miss this feature on Street Smart. Uber. Okay, that looks good. Uber. Yeah, lots of Uber here. No follow through yet. All right, still consolidating. Uber. Let's go, Uber. Get lab going. Carvana. Carvana just consolidating another day. Okay. Home Depot. Home Depot's still stretching. Home Depot still stretching it. Nice follow through. Home Depot looks good. All right, VWAP up and to the right. Higher highs, higher lows. Looking for a pop. Home Depot. Home Depot has an ATR of about $5 and change. It's currently up 427, so we might see a little bit more on Home Depot. All right, looks like Bitcoin might be ready to bounce. Bitcoin looks like a bounce is in store here. Flat view out. C3 AI looking good. Royal Caribbean. The cruise stocks looking good. AMC. That's the time of year, right, where everybody goes to the movies. I don't think I've traded this one in a while. AMC, yeah. AMC. Let's take a look. AMC. Dead money. AMC. Dead money. AMC. Maybe you could sell a butterfly. Let's see what a butterfly looks like on AMC. Okay, we're starting to fade a bit more. VIX is starting to pop a bit. VIX. We're fading a bit more. 455 is support. ARK K. Yeah, it's nice trend. ARK K almost back to the highs. Volume looks good too. Let's see, 1, 2, 3, 4, 5. Past 6 weeks. Persistent volume on, take a look on the weekly. Weekly is even more obvious. Yeah, there you go. Weekly, ARKK. All right, on a break of 53.50, 53.50. Let's see what that looks like. That's a good one. That's a good one, Captain. Let's take a look at this Fibonacci's. All right, let's take this low and let's take the high right here. Let's say 50, 53 would be good. Okay, there you go. 29.19. 29.19. Okay, that would give you potential 1618 target. That lines up very nicely. You see that? See where it lines up, Captain? 1618 extension would put it right near that previous pivot at 71. Okay, it looks pretty good. Good catch there, Captain. Good catch. All right, let's see. NY Fang. Okay. Higher highs, higher lows. Okay, so that looks good. All right, I hope everyone's having a good day. It's already 11:30, almost 11:30 on the East Coast, the best coast. Hope everyone's having a good day. It is December the 6th. Just counting down the days to the holidays. What's he talking about? Volatility, VIX. Doesn't seem like anyone's interested in protection right now. VIX is just continuing lower. Okay, Bitcoin back above VWAP. Bitcoin. What's Qualcomm doing? Qualcomm, this is RK. All right, so we know where our targets are on that. If you're trading it, I already have a position in RK from over here. Who I think my son said somewhere around June. I want to say June. He's been in it for a while. RK. Initially sold it at 50 and change, and then it pulled back. I think he got back in. Nio looking for a follow through. Nothing yet. Tornado looking pretty good. Following through. Pilgrim's Pride. Royal Caribbean. Carnival. Royal Caribbean. Those doing very well. All right, SPY. New York FANG. SPX. Okay, down below at 45.73 zone. S&P. Support 45.25, 4,500 below. 4,600 most likely going to hold price in this area. All right, so we're continuing to fade on the S&P. No follow through, no buyers yet in this range.
Low ticker minus 800.
Biotechs continue to show favor. Biotechs. Okay, looking really good. Biotechs, this is week number 6. We had on week number 2 on the reversal, got rejected initially at the 10 EMA. Volume picked up on the break above 72.50 4 weeks ago. And then we followed through decent volume over the last 4 weeks. Looks like XBI and biotechs are going to continue this trend. Looking good. LABU looking good. Continues the trend. All right, so looking for Mara, Riot, and other Bitcoin related names to continue this trend. Coinbase consolidating for the past 3 days. Okay. Bitcoin, of course, broke higher last Wednesday, continues. Now it's consolidating at 44,000. Okay, let's look at the weekly. Okay, getting back to where we were a couple of years ago, back to the highs, 69,000. Okay, we're back almost 50. We are 50%, right? Looks like 50%. Actually, you know what? I don't need to do that. Let me go to at Bitcoin. Bitcoin weekly. Bitcoin weekly. I already have a chart. All right, so we can see that it's doing exactly what we were anticipating. Once we broke out of the consolidation accumulation phase, accumulation, moving averages get flat, and then turn up and to the right. Looking for that momentum. You can see the momentum indicator here, rate of change is starting to turn up, accelerating to the upside. Phase 2 started about 10 weeks ago, moved above the 10 EMA. Targets were laid out back in late November, December, using the previous high and the then low at 15,400. I know Russell was short over here somewhere, I believe, right, Russ? Pretty sure Russell was short Bitcoin. All right, let me just push this out of the way here, so it's a little easier to read. Okay, targets. Actually, you know what? I'm going to put that back where it was. Put that over here. Because I have these already laid out. Okay, that looks good. All right, so rate of change is turning. All right, let me just adjust this a little bit more. 2 years, 6 months. Yeah, that's perfect. Okay. Okay, you can see rate of change is turning though, accelerating to the upside. Phase 2 underway. Markup phase is underway. FANG stocks are lethargic. They're not doing much. They were all green this morning. Now only 3 of them are green. 7 are red, the New York FANG. All right, tick cumulative has crossed up. We're trying to get the fast signal to move back up. It's 2.4 to 1, 2.4 to 1 on the NASDAQ. NASDAQ is got a nice bounce on the up volume. Qs. Okay, Home Depot, just off the highs of the session, Home Depot. Mm-hmm. Walmart CEO on CNBC. Still fading. SPY, S&P still fading. Down to support 45.50, 455 SPY. Let's look at IWM. IWM by comparison. Okay, VWAP is flattening out. Looking for some mean reversion back towards 186.70. Still seeing a decent amount of selling.
What about holiday hiring versus other years? Our full-time ratio is so high relative to retailers, we just don't need to hire as many part-time. Normalized hiring environment. Normalized wage environment.
Okay, let's see. Sector-wise, we're still 85% green on the day. The sectors that are lower, consumer staples, that's defensive. Energy, you could say energy is somewhat defensive. Technology, which is off less than 0.5%. Small cap energy, crude oil is lower. Let's take a look at crude oil. Crude oil shares. Let's look at USO. Crude oil, USO. Continues to drop off, gapping down. Let's see what crude looks like. They want to fill the strategic petroleum reserve. So at 69, whoa, we're below the $70 threshold. So they'll be filling. Yeah. Yeah, I was just looking at that Grover, thanks. NIO, with a pretty big trade on NIO. Looks like NIO with a big block trading.
So Algeria joining the chorus from Saudi Arabia saying that the latest OPEC Plus cuts may be extended beyond Q1 of next year. Private brands are important. We invest in quality. We try to treat them like they really are brands and not just some private label. But we wouldn't want to see them to continue to grow a percent of total too much. We would like for the brands to offer value to customers.
Okay. All right. So market's just chopping around. This is good for people who sell premium.
OPEC Plus may consider extra measures to steady the oil market. But the branded manufacturers are starting to respond on price to get unit economics back.
Market's going nowhere. A little drift. Back down to support. Uber, lots of blocks on Uber.
It'll correlate to the e-commerce business. So growing e-commerce in the marketplace is key to being able to attract more advertisers. what we can do that some other people can't do.
So again,
is
to
we can
clarify,
connect the
Algeria
dots
does not
between
rule out
an ad you
extending
may pay for
voluntary oil
digitally
cuts
and
beyond
a
Q1 next
subsequent
year,
purchase
or
in a
taking
physical
additional
store
measures
so that
to
you can see
prepare
the ad
for
actually
this.
work. So it too is an omni business for us.
Growing the ad business, growing, what about financial services?
Mm.
That's a priority for you.
Yeah, we've had a pretty big financial service business for a long time, but it's largely analog and in person, and that continues. But we'd like to digitize it, and some of those financial services show up in our own app. We also have a JV with Ribbit Capital for a product called One Financial, and we're starting to see that scale, enabling a customer to use it to check out, to pay, eventually be able to have other services that would enable them to have a digital experience just like the one they've had here in person.
So how big of a portion can overall services be for
Mm.
the world's biggest retailer?
Depends on how you define services, but there is definitely a more B2B aspect of the company today with the marketplace seller relationships, what we're doing with advertising and some of these other things. So I think that the percentage will definitely go up, and we'll use the front of the store to do things like help take care of your pets and things like that. So services will continue to grow and help us with the income level.
Doug McMillon, CEO of Walmart, on an interesting piece of his strategy there when it comes to growth, and they see double-digit growth in advertising, into financial services, trying to sort of explain the strategy, Mike, of why in a softening consumer environment, Doug McMillon believes that they will continue to grow higher than the overall retail rate. The last hour, you talked a little bit about the consumer softening.
Crude oil
Like a tougher balance sheet.
looking good. Crude.
And an environment where prices are coming down, even use the deflation word on general merchandise category, which hurts Walmart sales. And he says it's on us to sell more units.
Well, it hurts their sales, but as a company, culturally and historically, they've been a deflationary force. I mean, they seem to know how to operate in a kind of pricing aggressive value first.
No, and I think it's great because it means the consumer will have more spending power to be able to
Operating from
spend
a
on
position of strength.
general merchandise and other categories. But
Yeah.
I also thought, we just spoke to Campbell Soup CEO Mark Cloud, and here you hear Walmart talking about the share of private label rising versus brands. The top brands are coming in now, and they're going to have to respond by lowering prices to drive.
Look, it's a familiar dynamic. That's what Walmart has done for a very long
But it's
time.
shifting for the first time in a while, really, since in this post-COVID
That's
environment.
right. All right. Well, we'll hear a lot more about the retail landscape with the CEO of Amazon tonight, Andy Jassy, joins Mad Money, 6 p.m.
Looking forward to that. After the break, we're going to head back to Capitol Hill as the top bank executives continue to answer questions from the senators. Stay with us.
All right. Crude oil looking good. USO lower. That's good for the consumer. All right. Let's look at the US 10-year yield. All right. Rolling over. The US dollar, DXY basket 103, 104. Okay, VIX turning back. All right, down near the lows, VIX. Okay, S&P 500 stocks in play. Albemarle. Did you guys hear about that big deposit of lithium, among other things? The Caldera in, I guess, southern Nevada. I guess it's southern Nevada. Anyway, it's one of the largest deposits in the world. And probably going to turn out to be a good investment if there's a way to do it. I don't know it yet, but I just was watching a video about it last weekend. I forgot to mention it. There's a caldera in, I think it's southern Nevada. Anyway, the largest lithium deposit in the world. Meanwhile, Carnival pushing higher. Carnival, big breakout. Congrats there, Grover. If you took it with Grover, nice volume on Carnival. Royal Caribbean, nice breakout to new 52-week highs on Royal Caribbean. Volume looks good here too. Norwegian Cruise Lines bringing up the rear, but bullish as well. Breaking out. Look at the volume on Norwegian Cruise Lines. It's about 100 million shares traded hands there in the last 6 or 7 days. Looks good. All right, VIX, S&P.
CNBC launching its new cross-platform franchise called Cities of Success. It's a new series that explores cities that have transformed into business power centers, driving change across the entire U.S. economy. The first stop, Nashville. The city looking to attract a wide array of businesses, including manufacturing. As auto workers around the country fight for better pay and benefits, Nissan, just one of the companies that has put down roots.
In Nissan's mind, it had to make financial sense, obviously. We had to be able to retain key talent, to be able to make the move.
All right, let's see. Neo. That one seeing some action today.
That made it doable.
Looking for a follow through.
Nissan, just one of the companies profiled tonight as part of the series. Do not miss CNBC's 1-hour primetime series.
60-minute chart on Neo.
Well, let's get back to Capitol Hill where the top banking CEO
Neo.
Leslie Picker has the latest. Hi, Leslie.
Hey, Mike. Yeah, those higher capital requirements remain the focus of today's hearing. Senator Tom Tillis asking Morgan Stanley CEO James Gorman about one tenant of the Basel III endgame proposal.
Yeah, don't really care.
So yeah, something that jumped out at me is that the government also has financial backing from Major League Baseball,
Um, David, I finally watched the rest of that Barry Sanders, Detroit Lions Netflix special. Finally watched the end of it. Really good. It was really good. If you like the Detroit Lions, or if you a big football fan, Netflix has a good series on Barry Sanders. It's actually just a movie, a documentary. Very interesting. All right, so we got about 85% of sectors still green, being led by biotechs up 2%. XBI is up 2%. Builders are up 1.75%. XHB and NAIL, NAIL. Ways to trade that. NAIL. You don't know what it's like to be a bad man. Be a sad man behind blue eyes. All right, IBB looking good too. SOXL, semiconductors, higher lows, trying to reverse the trend over the last week or so. Couple of weeks, SOXL has been moving lower. Semiconductors taking a break. Now it looks like they might be turning off of the 21-day. Look for a follow through. Same thing here. Stochastics gets oversold. Look for it to turn. Need a volume to start picking up like it was in the beginning of November. Off of this bounce. I like the bounce better. I don't like buying the highs. Less of a probability of winning when you're buying at the highs. At extremes above the upper Bollinger Bands or Keltner channels, whatever you use for volatility. You can see if you check semiconductors and the Bollinger Bands that we got up against it. Okay. When the lower band turns in, that tells you to look for consolidation. We consolidated. Now we're watching for a continuation of the trend that started in the end of October. Let's look at the 60-minute. 60-minute. Still fading. 2-hour chart. All right, semis look okay. Biotechs, though, biotechs are looking great. Trending along the upper Keltner band and Bollinger Bands. Lower Bollinger Bands. Notice the lower Bollinger Bands still opening up down and to the right. That tells you to look for continuation and a fast move. Look at the volume. Okay, so when the Bollinger Bands open up top and bottom, that's telling you look for a fast move. When the Bollinger Bands turn, keep an eye on them, because if the upper band is moving higher and the lower band starts to turn in, that's just telling you still bullish, but maybe a grind higher. When they both come together, when they're both starting to point towards each other, that's like over here in April, when they both turn and start to turn inward, that's telling you look for consolidation. Okay. Looks good though. All right, NIO. Okay, consolidating along a double bottom, looking for a pop on NIO. Can we get back to 16? That'd be a double. That'd be nice.
Thank you both so much. Alex Barron, Housing Research Center, Jim Warden, the Wealth Consulting Group. Thank you both for being here.
NIO. If we get a bounce and a follow through, if we got back to the highs, that would be a double from here. So that looks good. All right, Meta trying to build another bullish 60-minute candle. All right, so if we can get that to start moving, Meta. Maybe this does turn. That's the 50 days, the 200 days right there, right? No, that's the 50 day. 50 days right there. Starting to build another wick underneath this candle. So a bullish close today above yesterday's high would be nice. RSI is turning. Volume starting to pick up. Stochastic is set up primo. If this turns as a function of price, of course, that would suggest a change to closes in the upper half of the daily range like we had from October into the third week of November. So when this turns up, look for closes in the upper half of the daily range on a rolling basis. That's a 14-day. This is 14. So look for, on average, closes in the upper half of the daily range going forward until we peak at 80 or get in this area and start to flatten out or turn down like we did in the third week of November where we started to stall. Okay, watching RSI too. So this looks pretty good. Meta looks pretty good. Looking for a second hourly bullish candle. Now, I like when a stock or asset gets back above its 20 EMA on the 60 minutes. So this is just starting to transition. It's a little early. If we do continue, I'll probably buy some shares by tomorrow and sell some covered calls or maybe a call vertical. Right now, I have a credit spread, and that's working just fine for now. Looking for prices to move higher. I have a put credit spread, so I'm selling. I sold the, what did I say? I sold the 290 and bought the 280. All right, Meta turning, so that's good. S&P is starting to bounce near support.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, powering every investor and trader.
Every market day.
Uber, looking for that follow. Look at Uber's Hank and Ashley chart. Looking good, Uber.
24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere on any device for free. Schwab Network.
Uber. So that's the 60-minute. Look at the 30-minute Hank and Ashley chart on Uber. You can see green. Continuation. Okay. Spiders. All right, we need that to change. All right, IWM. Okay. QQQ. Trying to turn green. All right, Meta looking good. Meta. Meta.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We got a great lineup for you today, including discussions and strategies in Netflix. The streaming stock has rallied over 50% so far.
SoFi looking for a follow through. Yeah, I like it too. Yoda. Yeah, I like it too.
Which is up over 170% so far this year into their earnings. And like oil, break down consumer sentiment data on Starbucks, which has fallen 11% on a 12-session losing streak. Now, 2.5 hours into the trading day, stocks are relatively flat after data on private payrolls added to speculation. The Fed is done with its aggressive hiking campaign and will start cutting interest rates next year. Oil has fallen to over 5-month lows today, and yields continue to slide with the 10-year under 4.2%. Now let's take a look at the 4 major industries.
Apple, no follow through.
After we got that ADP report, the benchmark S&P.
Okay, AVGO. No, I want a Snowflake. What's Bitcoin? Bitcoin's still hanging in there. Snowflake looking okay. Bitcoin. Still consolidating Bitcoin.
Even good data, good news, falling interest rates cannot help this equity market after that spectacular November rally. That is exactly the feel that I got watching this market this morning. The data was strong, right? The data was favorable for the markets, and the markets liked them right out of the right when the numbers came out, especially Tom. So how about this? For the evolution of economic data, productivity costs. Suddenly, a number that is a kind of market mover, right? ADP, not a market mover, but productivity and costs, the way those numbers move, productivity,
Uber.
unit labor costs really coming down hard.
Flat VWAP right now on Uber.
The right direction for the economy. That said, as much as the market liked mortgage apps and ADP and productivity costs, it still couldn't maintain or sustain any upside rally. I think it's one of two things, Tom. It's either exhaustion or fatigue on the upside, or it's dry powder.
Meta, just watching Meta. Looks like it's starting to break a downtrend on the 60-minute.
the job state is really going to start accelerating to the downside, where we're going to get that unemployment rate to jump pretty heavily over the next couple of months here. So maybe that's lending to some of the exhaustion that we've been seeing in the equity markets. But after that November rise, it's not surprising. But a couple of corporate news stories today on buybacks. MasterCard and Exxon. Let's bring in Caroline Wood, senior market correspondent here. Help us break down this story. It seems like, hey, if everything's going okay and you need your stock to kind of rebound,
All right, S&P is still range bound between support and resistance. Support 455 SPY, 460 resistance. McDonald's. All right, yeah, that one looked good. McDonald's, MCD. All right, so it did dip this morning. All right, McDonald's. People got to eat. Okay, let's see what we got here. All right, so McDonald's, the implied vol is like really, really low. So credit spreads, not interested. Long call, verticals maybe, or shares. Yeah, I like it. Nice volume the past 4 trading days. Okay, getting a little bounce now. Okay, it's 12 o'clock. Let me go ahead and see what these guys have to say. Yeah. Okay.
Near-term leadership, which is obviously what we've had. Looking at the Russell, for example, in the last month is up near 8%. So it's been the outperformer relative.
They're talking about the S&P equal weight index. Let's go ahead and take a look at that. S&P equal weight. Flagging, but not giving it back. Last time we flagged on the number of stocks above the 50-day was back here in July. Then we made a nice little turn up for the remaining week and a half, made a new high, and then reversed. So are we going to do something similar? Look at the number of stocks above the 200-day, hooking upward.
do think to Jim's point that maybe now is the time to start making that call that this rally is going to broaden. And look, that's exactly what investors have been doing, get the pre-positioning for in the last week or so.
Joe, I mean, Goldman's trading desk says as much. They say that hedge funds have aggressively reduced net length in mega cap tech stocks.
They're getting ahead of a trade. Look, I have a very strong degree of confidence that what's ahead of us in the month of January is the rotation that we're all talking about, where you're going to see the funds and speculators selling off winners in quality, selling off winners in mega caps. Why? They're not going to sell them off now for the tax consequence. They're going to wait till January.
No, but why
they're going to rotate?
Well, why would you sell those?
Because they're going to rotate. It's a mean reversion trade. It's a very popular trade. It's a mean reversion trade that generally happens at the beginning of the year. Seasonals have worked remarkably well.
Uber.
Seasonals. If you buy the Russell.
Uber. To S&P.
The seasonally strong longest period for the Russell. That's from January.
Bitcoin's still consolidating.
You're gonna sell out of. You're gonna sell out of.
Bitcoin. Let's take a look at Bitcoin. BTC.
I'm just saying. I'm not talking about you. I'm talking about the collective you. You're gonna sell Microsoft? Is it, is around these new highs?
Still consolidating. S&P. All right, VWAP's starting to flatten out on S&P.
I keep going back to what Mike Santoli said the other day: the crowded and the neglected. The crowded are the names you're talking about, and you're going to reduce ownership of the crowded to move into the neglected. Here's where I disagree with Jimmy and somewhat disagree with Anastasia. I do not think we are at an inflection point for leadership. You do not have an inflection in leadership when you have performance and momentum strong over the course of 3 or 4 weeks. That doesn't defeat the leadership that's been in place for the better part of the last 12 months. What defeats the leadership is actual earnings growth, and the Russell doesn't have the earnings
Tornado.
growth. You need that. You might get it in the second half of 2024, but I think it's a false start in January and February if this rotational trade unfolds.
Not only that, Jason, look, if there is any kind of rotation, you have to believe that a pullback in mega cap is going to be bought, right? Like it has every single time, which means that you maybe a further rotation into these neglected, if we want to use that word, area, never materializes. Right. You just have everything. If the coast is clear, so to speak, you could have kind of everything in the market go up, but that mega cap is going to go up more. That money comes in from money markets, right, not out of mega cap and into these other areas either.
Yeah, so I completely agree with that, Scott, because one, obviously, listen, the breadth has been extremely narrow this year. We've talked about that all throughout this year. I do think, to Joe's point, from a positioning standpoint, there will be some allocation to other areas, the neglected areas, without a doubt. But I think, in fact, it's more about trimming. It's not selling these names, because I think growth is still in vogue. I think even the notes that we all see, it's all about quality growth. I mean,
Quality growth, right?
That's
Quality growth.
magnificent.
That's what we're talking about.
Yes.
Quality growth.
Yes. So I think the theme, the idea that we're going to push away or move away from these names is not going to.
Plus quality, I mean, they're defensive too, right? So you're getting quality growth, you're getting defensive, you're where the action is.
Yeah, we'll argue against any of that.
All right. All right. Meta trying to get some more action here.
I can't guarantee it's going to happen, but let's say we start getting that selling, Joe, that you're talking about, the cap tech
Rotation.
Yeah, gotcha. That mean reversion trade. And Scott, what you said, and it makes sense, right? That people are going to buy the dip. My hypothesis to the group and to the audience is maybe you don't get that buy, okay? Because maybe, I know, see, Joe's eyebrows just raised. Because maybe what happens is this momentum that you're starting to see in the unloved sectors actually catches people's attention.
All right. S&P is starting to turn.
Which has been slowly picking up with good valuation, with good prospects for earnings growth in a soft landing scenario, and people say, maybe I'll go there.
You better hope that doesn't happen. You better hope that doesn't happen. You got into NVIDIA late. That'd be your worst nightmare for a stock like that, is if you get selling in that name and then it's not bought.
Okay, but that's not exactly what I'm portraying, because what I
No, I know it's not what you're portraying. That's what I'm portraying.
I got
Is
you.
that if you get selling in some of the highest flying names like NVIDIA, right, that you don't want that to happen.
So, but let me respond. Okay, because let's take Apple, let's take Microsoft.
All right. Mara. All right. Watch Bitcoin here. Trying again.
Roughly 30 times on Apple, roughly 32 times on Microsoft. I'm saying to you, those are not valuations at which some trapdoor is going to open, and you're going to see these stocks down at, high teen valuation. I just don't see that happen. However, could you see just a rotation out that knocks these stocks down 10, 15, 20%? Sure. I'm underweight these names. I could add to them there, but I'm not predicting a disaster in these stocks. There is, outside of the Magnificent Seven, roughly 75% of the S&P 500
you just
that
said
could be
10,
bought.
15, 20%. That's a disaster in these
It's
stocks,
happened.
is it not?
It's happened in the last few months, right? Where did Apple go from roughly 194 to 168? I'm doing the math really quickly, but what is that? About 15%?
Yeah, and it was bought.
And
That's why it's at 194 now.
and
193.
nobody's
Back above
panicking.
3 trillion.
It's not a bad year. And by the way, at the same time that happened, I'm so glad you pointed this out, because at the same time that happened, what's rallied? Small caps, average equal weight S&P 500, i.e. the average stock. The scenario that I'm portraying is actually a continuation of what the last couple of months.
I just agree with Jim on this a lot. I think what's happening right now is trimming. You know, and by the way, the golden note that you referenced earlier, Scott, said that the last 15 out of the last 17 sessions, the Magnificent Seven were sold. You know, and yes, of course, they pulled back or consolidated. But at the same time, I think investors really want to go into the next year with something with a better idea than saying, let's buy the dip in Magnificent Seven. And there's a lot more opportunity to step in and buy things that haven't performed. For example, that unprofitable tech trade that I was talking about, it is down 54% since the peak that we saw in 2021. The NASDAQ is maybe roughly flattish. So there's a lot of catching up left to do. And so, yes, that basket has rallied 30%, but it is still down quite a bit. And if I think about who is the ultimate beneficiary of a rate cut, those are the junkier companies, the lower quality companies that just didn't have a chance in this rate environment.
That's why non-profit.
Okay, watch Biddy's. Looks like it's going to go.
From November, as rates went from the 10-year 5% to 4.11, so wherever they are now, because the ARK Innovation Fund is coming off its best month of all time.
So if we could stay on rates for 1 minute, you asked a great question yesterday. I didn't give you an answer. I punted on it. But you said, what happens if the 10-year
Bitcoin taxing to the end of the runway. Looks like it's going to go. Maybe it just stays range bound, but it's been a range bound action. Bitcoin. Okay, it's been range bound this morning. Look at that doji on the daily. Okay, so if you zoom out here a little bit, it's been range bound since the close yesterday. Is pretty much same. Looking for this to break out. Bitcoin. Look at the volume picking up here. Look at the volume.
Well, the other problem, Jim, is that if you have rates continue to go down.
All right, SoFi, I have the January 9 call.
At this point, not because inflation is coming down, which it is, but because the economy is slowing.
SoFu, not SoFu. SoFi. You're so fine. So fine.
ADP was below expectations. Now wage growth is slowing, which is pushing yields down further. So it's a mishmash of.
SoFi gearing up, starting to go. All right, so Mara looks good. I agree with you there, Mondo.
You're exactly right. And to add to what you just said, it's actually getting a little dangerous. Okay, so we're getting down to those levels in payroll growth where I'm getting a little uncomfortable. Now, I maintain my enthusiasm both for the economy and the stock markets, but as we look forward to the labor report on Friday, you know, look, this thing is coming closer and closer to zero, and that's not something the markets, I think, are really going to like. Yes, the markets want a soft labor report, but they still want a growing labor report. You don't want the hard part of the hard landing to come back into the vernacular. Zero on a payroll growth on a monthly basis. I think that has to come back into the vernacular. So, to the point you're talking about ADP report coming in a little soft, and the number was 103,000. That's not a big number. So people like me who are bullish are not unaware that there is danger out there that this slows down.
Danger, Will Robinson. Danger.
They got a new chip, and they're looking to take on NVIDIA. Christina Partinella.
Ooh, that's nice. AMD.
Well, just like you said, this is about proving that AMD is a suitable competitor to NVIDIA's H100 chip used to power large language models. But when compared with NVIDIA's H100,
Let me see what the money magic levels on AMD look like. AMD. AMD, you got 120 and 130. We get above 120, you could see 130.
switching costs and could lead to a slower AMD uptake for new customers. AMD estimates AI data center will bring in about $400 million in Q4 this present quarter, with $2 billion next year. That's specifically geared towards their MI300 chips. Investors will be looking for details on whether that $2 billion threshold will increase today. So a few things to keep an eye out for this big event that's happening. Everybody's in the other room right now. It's still early right now on West Coast time, I should say. But who are AMD's partners? Which hyperscalers will take to the stage and show that they are now buying from AMD, not just NVIDIA? Any increases to the MI300 2024 estimates? and performance metrics, especially when you compare to NVIDIA's H100.
All right. So at this afternoon, 4:30, right? Lisa Su's gonna be on the network, giving an interview about all
Yes, I'll
this.
be
You'll be on there with that.
Well, I'll be speaking with her, and that's going to be definitely some of the topics. You know, the comparison, the pricing, China export controls. Given that Nvidia has already warned, you know, it would significantly impact Q4. AMD's, remained a little bit more quiet, but that's because they don't do as much business with China. The specs, and especially the open source software here, and then lastly, the partners. That's a big deal. Which partners are already going to buy AMD products and integrate it into their systems as opposed to just using NVIDIA?
NVIDIA CEO, speaking of, Jensen Huang, he's in Singapore, right? What's he reacting?
Right.
Has he had any reaction to this yet?
Not necessarily to this event per se, but he did comment on U.S. export controls, and this is just after Secretary of Commerce Gina Raimondo on Sunday said indirectly to NVIDIA that she would control any chips that have been rebalanced or rejigged to provide AI to China. So she was pretty aggressive about that. NVIDIA said they're working with the United States on those thresholds. They're falling within those thresholds. So that's what Jensen said just over the past few hours. And the second point he made, which I found really interesting, is he said Huawei is a very formidable competitor. That is putting Huawei on a higher pedestal. Huawei was able to create AI chips with older U.S. equipment. What does that tell us? If they've already been able to advance so much so that the CEO of NVIDIA is saying they're a very formidable competitor, what does that mean for this market, 2 years from now, when you have all of these new entrants from hyperscalers to AMD, NVIDIA, et cetera, joining in and taking some of that market share?
Christina, we'll look forward to your interview with Lisa Su later today. Christina Pretzenevelos out in San Jose for us. Jim, it feels like it's NVIDIA, AMD, Broadcom, and then the also-rans. But, Bank of America today says Qualcomm's the top pick for it because they are a key beneficiary of AI.
Got to pat my fellow here on the back. He's with me in that. There are some growing indications that the bottom really is in semiconductors, and I'm talking about outside of AI, the more cyclical stuff, mobile phones, PC. You're getting more and more indications from both companies and from trade organizations like the World Semiconductor Trade Statistics Organization. It really looks like the bottom's in. Now, folks, as I say this, look, when a bottom forms, it doesn't form in a V usually, okay? So there may be some noise down here at the bottom, but barring a sharp contraction in the global economy, these are the sort of stocks that should perform well going forward, are the more cyclical types of semiconductors, like a Qualcomm. Congratulations, Jason. Like an NXP, obviously tied to automobiles, but also Internet of Things. But these more generic semiconductor companies should do well going forward.
You want to talk about Qualcomm? Yeah, and AMD. I mean, lack of ownership, looking at it. What's your story?
Yeah, so I think to Jimmy's point, I think what the big part for me on Qualcomm, I think handsets are bottoming. So I think they're back on the way up. I think IoT is also moving as well. Autos, I think, they're really starting to diversify their revenue over the last few years, and I think that's what the opportunity is there. It's a cheap stock. I mean, a lot of these semiconductor stocks are very expensive, right? So 10 times earnings roughly, right? And it's up 14% in the last 3 months. So, and it's up only 18% for the year. So I think this is a very positive development. I think also the move in Foxconn, the manufacturing for the Apple phone. I think again that speaks to the advantages Qualcomm will have going forward.
Got something real quick.
Personally, I do not want to chase the semis. I think the potential is there that in Q3 we saw a little bit of a peak in terms of earnings growth. I could see a deceleration as you move into the early part of 2020.
AMD
I just believe from the general sense of, as you point out,
has something announcing a new chip.
that's going to affect risk. And Q1's probably your weakest quarter of the 4 quarters in 2024.
All right, we're going to take a break. We'll come back. We'll do our chart of the day. It's a big pop for a big bank. Jim owns it. We'll get his take. Plus how the rest of the committee is playing the financials. We're back in just 2 minutes.
Yeah. Yep. Looks good. AMD. Okay. All right, AMD. I like the idea of a move on AMD would be nice.
All right, we're back. Citi is our chart of the day. It's rallying today after it says it's going to buy back roughly $500 million worth of shares in Q4. So revenue expected to be at the lower end of guidance, right? We know that. Expenses down in aggregate. What's your take on the stock that you own?
Well, I'm happy to hear the buybacks, and that's a central part of the story at Citigroup. But it's also been in question recently because some of their capital ratios, there's been a concern that maybe they wouldn't buy back as many shares. So you get news like this, and you like it. However, it's also gravy on the overall meal that Ms. Fraser, Jane Fraser, the CEO of Citigroup, is serving us up, which is that she has finally.
All right, still drifting lower here.
At Citigroup by cutting costs. And in the last several months,
Persistent fade in the SPY. Meanwhile, watching everything else, trying to hold on to these levels. Meta starting to pull back a little bit. Meta.
Ms. Fraser got absolutely no honeymoon when she took over the helm about 2.5 years ago. She first wanted to right-size the bank with regards to getting rid of international operations. I think that's mostly done right now. Still a little Mexico situation to deal with. That will take time. However, she's doing all the right things now, cutting costs, getting the buybacks going. I like to see the surge in the shares here.
What do you think, Anastasia, about the sector, which is tracking for its sixth straight weekly gain? That's the first time since May of 19.
Yeah, it's been a huge rebound for the sector. Obviously, everything that didn't work for it earlier in Q3 was working in November. You've got rates lower, you've got soft landing hopes higher. And, you know, what financials are going to perform well if we are going into a rate cut environment. Again, looking at the top performing sectors in that 6 months, you know, red zone, so to speak, it's infotech followed by financials. So they can perform well, but personally, I still have my hesitations because if you think about the sector that is most vulnerable to taking credit losses, it is the financials. And we know defaults are rising, we know delinquencies are rising, we know bankruptcies are rising as well. And I think that's the sector that has to absorb it is the financials. So if I could have my preference for now, I would stick with a cleaner story, which I think is STEC.
Joe, the other thing that's been rising, regulations, much to the unhappiness of the bank CEOs who are down on Capitol Hill again today complaining about it.
Yes.
How much does that hamper what bank stocks can do from here? The regulations that they themselves are telling you are no good, but they don't seem to be, Basel III doesn't seem to be going away. It's not going to go away.
I believe it's been hampering financials and in particular money center banks for the better part of the last decade. So I think it's already impacting. I
think when I look at the banks, I look towards Morgan Stanley and Bank of America. I have remorse because I liquidated positions that I had maintained for the better part of many years in both of those names. I like the wealth management businesses for each of those entities. I'm looking to get back in. I played JP Morgan very well throughout the entirety of 2023, but I want to be a little bit of a seller of some JP Morgan. I want to go back into Morgan Stanley, Goldman Sachs. And the last point on
Capital markets coming back.
well, I like the fact that I think in an environment like we've just witnessed, that their trading revenue, I think, can excel. I think they're better at it. It's a little disappointing to hear the Citibank CFO talk about how because commodities and fixed income opportunities aren't there, that the revenue's down significantly. That's discouraging. It's one of the reasons why I don't want to own Citi.
If I can just really quickly, it's a good point, but I do want to point out that Citi's really, their crown jewels are security services and treasury, doing corporate cash management. And the reason I bring this up is because people a lot of times will compare Citi to JP Morgan. I understand they're both big financials. They're really doing different things.
Jason Snipe, you own Goldman, which Joe was talking about.
Yeah. So for me, I think it's completely idiosyncratic as it relates to financials. I think, Anastasia makes a really important point on credit quality of the consumer. So for me, I way too financials, but in particular, it's going to be capital markets. So that's why I like Goldman Sachs and some of the IB players, because I think that's where the yield will come from.
I think if you were to buy a call option on financials, you buy a call option on capital market activity recovering. That was what really didn't play out in the fall of this year as everybody expected. But if you do have rates coming down and capital market activity picking up, financials like Goldman and others will certainly benefit a lot.
All right. Speaking of financials, we do have a market flash on Blackstone. It's down sharply. The Blackstone Mortgage Trust. Muddy Waters founder Carson Block announcing a new short position in that REIT just moments ago. Mr. Block is going to be joining the exchange, and that is coming up, as you know, at the top of the hour at 1 p.m. Eastern. So you'll hear from him. Show you, there it is, down more than 6%. Interesting story developing there. For the other stories that are developing as well, Pippa Stevens joins us with the headlines there. Pippa.
Hey, Scott. Wisconsin Trump electors officially named President Biden the winner of the 2020 election. 10 Republicans who signed paperwork falsely declaring Donald Trump won the state in 2020 agreed to revoke their filings as part of a legal settlement. This is the first time pro-Trump electors have agreed to withdraw their false filings. The settlement comes as investigations are underway into Republican electors in 3 additional states. A grand jury declined to indict an off-duty Alaska Airlines pilot on attempted murder charges. Instead, they charged Joseph Emerson with 1 count of endangering an aircraft and 83 counts of recklessly endangering another person. Authorities say Emerson was riding as a standby employee passenger on an October flight to San Francisco when he allegedly tried to cut the plane's engines mid-flight. And the indigenous nation that invented lacrosse, the Haudenosaunee Nationals, could be allowed to compete when the sport returns at the 2028 Olympics. President Biden is pushing for the International Olympic Committee to make an exception to the rules for the Los Angeles Games. The Haudenosaunee have competed at Games and other international events since 1990.
All right, looking for a bounce. We're holding the lows for now, S&P. Watch Bitcoin. Bitcoin a higher low. Bitcoin higher high, higher low. Volume. Crude oil. You trading? Are you long crude oil, Grover? Okay, the dollar starting to roll lower. 10-year at the low of the day. $4.11. Okay. That's what I thought. VIX 1288. Crude oil at $69.40, $69.58. Okay, we got MACD crossing on the dollar, looking for the dollar to move lower. Here's the US dollar. Looking for that to roll lower. The 10-year, US 10-year is fading more. Let's look at the daily chart. US 10-year continues this ramp lower from 5%. Wow. Almost off 100 basis points. Okay, looking for a higher high on Bitcoin into lunch. I love these politicians bloviating on Capitol Hill, talking into the banks' CEOs, giving them some prime time coverage. And Bloomberg's had them on the entire morning, bloviating for their constituents. Yeah, go get them, Senator Butler. Get them, get them. They'll not do anything. They're not going to do anything. They're just trying to posture and make themselves look like they're doing something. A little cynical on Congress, Senate, politicians in general. Okay, Uber looks like it's turning the corner and wants to pop a little bit more. We can get through 60.
Yeah, listen, I mean, it was a really nice print this past quarter. So I think, one of the things that I think that stuck out to me is one, international sales are growing really nicely. I mean, it's only 11% of their business. Mexico being most of that. They're starting to do business in Brazil, which I think is well they're starting to invest there. So I think that's going to go nicely over the next couple quarters. But what I think is the main thing for me is costs have come down. Equipment costs have come down dramatically, so gross margins are growing really nicely. That's going to be accretive going forward, and that's why we continue to like the stock. Also, the average age of a car is 12 and a half years.
AutoZone, AZO. All right, that's technically retail as well. Ozone. I always find it interesting. AutoZone, you go there and they got like parts for every car, just about every part needed. Well, obviously the smaller things. AutoZone looks okay. Trying to break out. John Deere. Ooh, John Deere's waking up. Okay. Oh, no. Okay. I got excited there for a second. John Deere was one we traded a couple of weeks ago. Credit spreads intraday and then took them off. Caterpillar got rejected just below the 100 period moving average. Caterpillar trying to break out. John Deere's a top pick over at Oppenheimer, so it looks like it's based long enough. Looks like Deere has based long enough. It's like a double bottom. We traded on that big white candle right there where the big red bar of put volume, or rather selling volume. Traded it from about the first 5 minutes of the trading day all the way up to the highs of the day, took the credit spread off, and then it faded for the rest of the last couple of weeks. So I'm looking for this to break out. Oppenheimer, number one pick. Regeneron, REGN, named the top pick at TD Cowen. Okay, that looks good. I like it.
Apollo Global reinstated outperform at DMO. I know you own that too, but Anastasia, you've got some thoughts on that price target to 108.
Yeah, I think the upgrade or the initiation possibly makes sense, and I'm going to speak broadly to the private equity and the alternatives environment. There's a huge secular growth opportunity, of course, as these alternatives managers expand to the wealth management.
Generon looks good.
The potential for additional flows, but there's also, I think, a cyclical pickup as well, because fundraising across private equity.
XBI, biotechs are also looking good.
think that is getting some interest back into the space. So I would suspect that private equity fundraising does improve in 2024, and that obviously bodes well for alternative asset managers like Apollo.
All right, quick break. Mike Santoli joins us on the other side of that with his midday word. We're back in just a couple minutes.
REGN.
Report podcast. What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Okay. Okay, looks like the low is in for now. Yeah, tick cumulative still don't have any kind of follow through yet.
Senior markets commentator Mike Santoli joins us now with his midday word. So, your thoughts on oil? Under 70, yields falling. I mean, at what point do you think the market starts to play this economic worry game again?
Yeah, I don't know if there's a particular price trigger for oil that says that, because it really is so skewed toward supply and U.S. exports and things like that. Perhaps yields really continuing to crash from here, not finding support, maybe just above 4% on the 10-year yield, might get that conversation started. None of that, though, would supersede, I think, what Friday's jobs number will tell us. But I agree, we're in that mode where we're more comfortable, I think, about the disinflation side of the equation than maybe we are about growth is going to be resilient going into next year. So we need probably confirmation on that. And the productivity data today, not that big a fan in real time of these short-term snapshots of productivity. It was obviously a third quarter number, but that's the way out of all this, because you did see a big jump in productivity, a drop in labor costs, and that sort of helps you out on both ends of the equation.
So what else jumps out to you today? You know, Apple, we said it's about $3 trillion again. Russell's not performing.
Mostly it's just that we got right back to the, to the rotation trade that's in favor of the cyclicals in the majority of stocks. I'm looking at this 2.5 week period when the market's gone nowhere. It's really been sideways for that long, hovering just below 4,600 in the S&P, and trying to find what it's doing wrong or what it's giving in terms of a fresh cause of concern. I'm not really seeing much, except that it's just hit resistance. Besides that, it seems like it's doing what you would want to see in terms of responding to an overbought condition and biding its time until we get the more key macro input.
Apple planning new iPad Air, iPad Pro, and MacBook Air models. Okay. Regeneron looking good. The 10-year continues to drop off, the 10-year yield. The dollar moving back towards 104. Bitcoin trying to get something going here, mustering some strength, maybe into the end of the day.
Talk about oil falling below 70. Well, there's Exxon, $98. It's down 2%. So, Jim, they've reduced the buyback. They update their production forecast too. What does the stock do now that oil seems to be heading in the wrong direction?
Well, I think it's clearly tracking the price of oil. I mean, that's an obvious statement to make. So then let's dissect what crude oil may do. And you know, Scott, I think about our friend of the show, Mark Fisher, who has said for quite some time it's in a trading range, high 60s to high 80s. He's been right. I think he's going to continue to be right. I mean, this is a stage at which production starts to get curtailed. You're certainly seeing it from OPEC. You may see it from the shale producers as well. Then the price rises again, and then, you know, demand curtails a little bit. But in the long run, I think demand picks up from here. The Strategic Petroleum Reserve just absolutely needs to be filled. The government should be tendering for many millions of barrels at this price. I don't know that China demand can get worse. I mean, famous last words, but I don't know that it really can. And if this economy, our economy, skirts the hard landing scenario, I think you'll see oil demand further pick up. With that, should pick up the demand for ExxonMobil shares.
You want to give your comment here? I think you own Exxon too, but so you can talk about the stock, you can talk about Jim's outlook for oil and demand itself, whether you agree with it or not. Let's talk about positioning. Let's talk about sentiment, because that is actually what I believe matters most right now in energy. I said coming into the quarter, having an overweight exposure to energy equities, that this was a prove-it quarter. Yeah, make it or break it. I could see it coming. You're in this business long enough. You see things coming. You know exactly what's going to happen. Okay, oil's going to go down. If you're rules based, which I am, I raise my hand. You follow the rules. At the end of January, myself and others, similar to last year, when everyone got out of the mega caps, everyone's going to pare back their holdings in energy. And then at some point in 2024, you're going to see the energy recovery once again. That's part of the game. If you're rules based, that in fact is what is going to happen. And I see that as right now developing. Everyone's still overweight energy, and everyone can make the strong fundamental argument. You've got Exxon buying back billions of dollars worth of stocks, similar to what Chevron is doing. Look, you want to be in now fundamental. You want to be in Exxon, right? If oil's going down, buy back the shares. You want to be in. This is a stock you want to be in if oil is going to go down.
If I take what you're saying as gospel, I'm inclined to for the short term. I mean, where's the sentiment on this? It's terrible.
But and correlate that with positioning.
Right? Okay, your point is made, and I will simply say then, God bless the company for buying back $20 billion worth of share annually. I went back and looked at the roughly 6 years from 2016 to 2021. You know what they averaged in buybacks? 500 million. 500 million. Now they're 20 billion. God bless them. Go do it, ExxonMobil.
You know, Joe mentioned fundamentals, and I think the fundamental case for oil is a little bit weaker than it used to be. You know, first of all, you've got record demand and yet oil prices are falling back, and that's because of the supply issue. OPEC Plus has cut a lot already. They're near record spare capacity, and yet oil prices are still suffering because there's too much supply coming on from elsewhere. So next year, you could end up with a situation where we might get some softness in demand on the margin, and there maybe not that much we can do about the supply. The only cure for the supply is going to be lower prices. So I think the case is a little bit weaker fundamentally, but if you can get buybacks, if you can get dividends and energy, I think you keep that at market.
All right, so financial engineering versus fundamentals. Jason Snipe, who owns Chevron and the XLE, as Jim smiles over your shoulder.
So, a couple things. I mean, one.
Okay, watching Bitcoin, looking for a retest of this 44,270 level.
To answer your point, I mean, you know, production, supply shocks have been a problem. I mean, we're producing 5.7 million barrels per day here in America. So that supply has obviously affected crude and where a lot of the energy names are. But I think turning the page to 2024, and if we can avert, to Jimmy's point, if we can avert a recession or really a material slowdown, I think energy can work, and I think it's kind of avert the Jimmy.
David's got Darren Woods, by the way, tomorrow morning, 9 a.m. Welcome to Big, of course, the Exxon CEO. So we'll look forward to that interview as well.
Okay, SPY making new lows now. SPY's making new lows. NYMO's at plus 41. Just rounding it up. Okay, gold higher on Fed rate cut bets. Gold, let's see, GOLD. GLD. All right, a little bounce off the best levels that we saw on Friday. Gold starting to bounce. TLT, you're seeing big options trades on TLT. Thank you, Buford. All right, nice move on TLT. That's a bit extended now. Okay, if you're still in TLT, I'm reducing my position. That's 10 points. TLT, we've been in this for a while. It's 1, 2, 3, 4, 5 week swing.
All right, let's talk to builders. They're rallying today. Take a look. Green across the board. DR Horton all-time high. Lennar all-time high. Pulte Group, Toll Brothers, XHB, ITB, Joe T. Yes, sir. You own DR, Lennar, NBR. Yes, sir. Joe T. This is where being rules-based actually benefits you because sometimes momentum actually works. And momentum, okay, builds over the course of time, develops into something not just on
Okay, all the
month basis, but really on a multi-year basis. Fundamentally, these companies,
all of the builders look good.
balance sheets are strong, inventories of homes, we know where they are right now in the country. This is clearly for me an environment where in 2024, if you're talking about now the cost of capital is beginning to move lower, you've got a lot of people that have been sitting on the sidelines, and what I call a transactional recession for residential real estate could actually begin to lift. Anastasia.
Look, I think all the points that Joe made are totally spot on.
Except?
Except for I tend to like to look at the contrarian traits, and of course, you've done so great in home builders, but they're almost back to their prior highs. But when I look at IYR, for example, which is more the commercial REITs ETF, it is still down 25% from its prior high. So I like that trade because if the Fed cuts rates, cap rates can potentially compress, and real estate prices can potentially rebound. And we've been hearing.
All right. So TLT has risen 10 points since we got in. Right in this area at 86. Actually, it was right here at 84. Gapped up. That was the week that I went to visit Duke University. That was a fun trip. Let's see. Fran, are you long Builders First Source? I'm not sure I understand. Is that a short position? You have a short position on Builder? Is that what that SR mean? SP? Uber at the highs? Oh, Builders First Source? Okay. BLDR. All right. Tesla, Apple. Tesla looking good. Okay, a little fade on Tesla at the moment. SPY still fading. You guys hear me okay? Mic check, mic check. Okay, so all of the builders looking good. Mortgage rates dropping further. BZH. HOV. Wow, look at Old Navy since yesterday. It's up 12%.
Closing bell, 3 o'clock Eastern. Hope you join me then. Liz Young will be with me. Also, Stacy Rascon
On that big announcement today from AMD ahead of
All right, up 12%. Hovnavian. Okay, cool. You can hear me. Yeah, they can hear me.
CBS making my final trade on Monday as well. Had an analyst day yesterday, very well received. If you look at the chart, this thing goes up another 3% or so, gets above 76, and it is primed to rocket.
Okay, Jason Sniper.
Into it. This is a play on small business. 50% EPS growth in the last quarter. I like this one.
Anastasia, nice to have you with us for the hour. What's your final trade today?
Municipal bonds, if the Fed cuts rates, yields will go down, bond prices will go up, I think close to 10% return in long-term munis.
Joe T. We have 1 hour update. If you have any of the home builders, and I'll actually add into that group Pulte as well, PHM.
Market's going the wrong way. Dow's about to give up its gains. It's up 10 points or so. You see the major averages here. There's the S&P, which is a fractional loser, as is the NASDAQ. Russell has lost some steam, too. I'll see you in a couple hours on Closing Bell Exchanges now.
Thank you very much, Scott, and welcome to the exchange. I'm Kelly Evans, and noted short seller Carson Block just revealed his latest short position on stage at the phone conference in London today. The name, Blackstone Mortgage Trust. The shares are down about 4% right now. The stock had a 3% gain for the year before the news hit. It's now turned negative. And Block is warning shareholders, here comes the cliff. Carson Block himself joins us now fresh off the stage in a CNBC exclusive to explain and to make his case. Carson, thanks for joining us and welcome.
Thanks for having me.
So let me just start with the fact that a lot of people will hear the name Blackstone and maybe be reminded of some problems with BREIT a year ago. Explain a little bit about your short against Blackstone Mortgage and any similarities or differences that it may have to that experience, that maybe first told us that there could be brewing problems with the real estate sector.
Sure. Well, Blackstone Mortgage Trust is separate from the BREIT, but basically Blackstone Mortgage Trust, they lend money to commercial real estate owners. So a reasonably significant portion of Blackstone's book is office, but there are other areas of the book as well. Now, it's pretty well known that office is facing a lot of headwinds, and this is really the perfect storm for office landlords, but for commercial real estate in general, because as interest rates have gone up, the values of real estate have gone down. But here's what we see is going to happen to Blackstone, and we don't think that there's really any way they can maneuver out of this. We think starting next year, their businesses and their cash flow is going to be under significant strain, because we extrapolate that about 70 to 75% of their U.S. borrowers are unable to cover interest expense without interest rate swaps that they put in place several years ago. Now, Blackstone's total loan book is about $23 billion. And we estimate that next year, swaps on $16 billion of that book are going to come off and basically expose these borrowers to having to pay market rates. And when we looked, so the way that we analyze this, we looked at these CLOs. These are these debts, these debt securities that Blackstone has sponsored. And the loans that are in the CLOs, we understand are representative of Blackstone's larger U.S. balance sheet. And when we're looking at these CLOs and looking in detail at the data, we see that 70+% of these borrowers, so about actually north of 25% of these borrowers can't even cover what's called SOFR, which is the base rate.
Right.
And then another almost half of the borrowers can cover the base rate, but can't cover that spread that's on top. Now, the big problem then becomes, eventually, these are interest-only loans. So eventually they have to refinance these loans. But the collateral values, the values of the assets, look to be significantly underwater. So for the group that can actually cover the base rate, but not the interest, it looks to us like most of those assets are underwater, basically below the loan values by about 20%. And then when you look at the group that can't even cover the base rate, that's about a 50% haircut from the market data sources that we're using. So it's not like they can end up getting out of these loans by paying them off. So we think that what's going to happen is Blackstone's basically going to have to modify these loans and allow them to make, pick interest payments. It's payable in kind.
Right.
So non-cash interest. And because of the huge amount of swaps, again, 16 billion that terminate next year, we think that that's when it's going to show up. Blackstone's been doing that a little bit. We understand that about 4 to 5% of its interest income right now is PIK, and that it's only extended about 6% of on its balance sheet. But I mean, with over 50%, well over 50% of the balance sheet, the protective swaps terminating next year, they're going to have to start facing the music. And so we think significant dividend cuts coming back half of next year.
Right.
And we also think they could find themselves in a liquidity crisis as well.
And that's probably the most impactful to investors. This is a dividend play after all. So you're warning that that's at risk at the back half of next year. You mentioned there is a way out potentially, and people might wonder why have the shares held up. You say, if the sort of overnight rate hits 3.5% at the end of next year without the economy slowing,
All right, we're fading some more.
avoid these bigger problems that you're talking about. And there are some well-respected economists like Jan Hatzius or Dean Mackey who say, yeah, that's basically a feasible outcome that we could actually thread that needle. By the way, I also just want to mention we've heard from the company. Blackstone Mortgage Trust says, we believe this self-interested and misleading report is designed solely for the purpose of negatively impacting our share price for the short seller's own benefit. We will respond in greater detail with the steps we've taken on both sides of our balance sheet, leave us well positioned to navigate this environment, as evidenced in our third quarter results. They mentioned their dividend coverage ratio, 126%, record liquidity, and a continued reduction in their leverage.
That's actually a very, very interesting point that you bring up, because as far as they actually, in their most recent quarterly presentation, they telegraphed for the first time they're concerned about their dividend. So in that presentation, on a slide that talks about that 126% dividend coverage.
All right, we're going to make a new low here on SPY. 455 is 60 cents away.
So that looks like classic CYA. We need to prepare for this to hopefully mitigate the lawsuits.
Okay, so VWAP's down and to the right. 4550 supports coming into view. Should see a bounce in that area.
That's led them to gloss over these problems, including by understating the risk in the loans. And our report that we published, I think we make a compelling case. If you look at it, that they've been absolutely downplaying the risk and the problems that exist in the loan book right now. And look, they have to do it, because if Blackstone's lenders say we're concerned and the collateral values have fallen below 80% of the loan values, then Blackstone's own lenders can say to Blackstone, we're basically going to call this loan, or you have to post more collateral. So that's how Blackstone finds itself in a liquidity crisis, is when its lenders say, yeah, we want more cash.
Yeah.
And at the same time, Blackstone also has $2.7 billion of unfunded loan commitments that it's made, and only $1.5 billion of available borrowing capacity. And so when you look at the cash that they're going to receive, is going to be sharply curtailed. Their lenders are probably going to want more money, and they have a bunch of borrowers to whom they've made loan commitments that they're probably going to have to fund. That's where you get the liquidity crisis.
And obviously, you've been saying Blackstone is a shorthand for BXMT, but is there any case in which this trickles back up to be a problem at BX itself, Blackstone itself?
I mean, that's beyond the scope of what we looked at.
Understood.
We've just focused
Let me
on
ask you then,
BXMT.
so for these mortgage types, whatever exactly for this product,
He's scanning through stocks right now.
Position companies might be Starwood Property Trust, Ladder Capital. I don't know if you took a look at those, but can you speak to whether, given the concerns you're describing are pretty broad and would affect obviously banks and a whole host of other players in the CMBS space, are there other kind of stocks similar to BXMT that could also face and run into these same issues? Would Starwood and Ladder be among them?
So, yes, as a general matter, I'll speak to that. So over the next 2 years, 24 and 25, there's $1.2 trillion of commercial real estate debt for U.S. commercial real estate alone that's coming due. So you're going to have a real scramble for cash. Now, when we're talking about a moment ago, Blackstone and downplaying the risk, so this is one of the things with this group of mortgage REIT sponsors. they're all playing the same game of like, well, nobody else has basically marked down a significant number of their loans. So if, Apollo's not doing it, then, we're not going to do it. So they can all collectively live in this plausible deniability bubble, basically about the risks in their loan books until these loans hit some sort of final maturity and they have to start actually provisioning for these losses, because they're not going to provision for these losses until it's too late. It's kind of like the ratings agencies will, they'll tell you that there's a problem, well after everybody's lost money. So I think that that's collectively what this group of companies do, because there's no incentive to be out there in front marking these, provisioning these loans for these significant losses that are coming their way.
The shares are trading around $21 today. Do you have a price target or an exit price?
At this point, look, there's some portion of this that depends on rates. We think that ultimately the losses that Blackstone, that BXMT is going to incur are probably 2.5 on the low end, 2.5 billion to 4.5 billion on the high end. So relative to the $4 billion market cap, that could basically eclipse the present value of the market cap. Some portion does depend on rates, but it's just there's really no way out of this that they have. They can just try to mitigate the pain some, but at the end of the day, the cash won't be there, and the dividend's going to be cut, and the losses will ultimately be incurred.
And maybe the flip side way for me to ask you that question is, what would the shares have to hit for you to abandon the short and say, maybe it was a soft landing, or maybe they figured something out? Would it be 25, 30, well above that?
Well, I think about it more in terms of the timing. So, through the first half of next year, they might be able to pretend this isn't going to happen.
All right, a little bit of short covering.
I don't think they're going to be able to pretend anymore. So, depending on if the market starts looking at this and the shares start pricing this in, then, then maybe we look at it and we're like, okay, do we want to lighten the position or what do we do? But if it hasn't really, this is one where, like I said, it's the reason I use this analogy, the title of it is Off the Cliff, and we have Wile E. Coyote, in that famous pose, having just stepped off the cliff and realized there's no ground underneath them, is because we think that's how it's going to go for their business. It'll be all of a sudden. So if the market doesn't start pricing that in sooner, I'm cool being short going into the second half of next year, absence, like you said, SOFR going down to 3.5% with absolutely, no diminution in the economic environment.
Right.
And I want to point that out. We might get rate cuts, but the rate cuts usually happen because of economic weakness. Commercial landlords are heavily exposed to economic weakness. So just because rates might get cut doesn't mean like, oh, that's great news. It probably means, almost certainly will mean that the income that their borrowers are receiving is also dropping.
Right. Carson, I want to ask you about the fact that this is a difficult environment to be a short seller. It has been for a decade, maybe especially so now. And the fact that Jim Chanos is closing his funds and returning the capital and just kind of citing the difficulty of doing so really highlights that, I think. Would you say that I even heard that it's cheaper than ever to short stocks because so few people are really interested in doing it? And I'm curious what your experience has been like as one of the most high-profile short sellers out there.
Well, it obviously has been tough to fight against the beta that we've experienced since the financial crisis. Jim's model is somewhat different from ours because we really only focus on these activist names that we talk about. I think it is, it has been very tough to take short positions and just sit there and wait for, what the shorts have gotten wrong since the financial crisis is really the timing, because debt was so cheap that companies were able to extend the runways forever, and especially short sellers who came up before the financial crisis. They always were used to seeing their theses materialize within 1 or 2 quarters. But companies spread these things out for years. We're not in that environment anymore. So I don't know Jim's reasoning. Possibly some of it's personal. I'm speculating there, but I do think that this is actually a pretty interesting time to have that kind of strategy that Jim has run all these years, where it's a non-activist strategy. So I don't know. I mean, high rates will make companies more honest. It'll bring the really bad companies back to earth. So if the central banks don't lose the
All right, a little bit more short covering.
the emergency monetary policy lands, I think that people like Jim could actually do pretty well.
Quick final question. A couple of the stocks you've had short positions on in the past, especially in the kind of clean energy space, for lack of a better term. Sunrun down 40% this year. Hannon Armstrong or HASI down about 12%. Are those still short positions that you have, or are there, any kind of comment you'd add about some of those companies that had been high flyers, as you mentioned, kind of during the COVID era with super low rates, but now are facing more struggles?
Well, we've been pretty active again in Sunrun. Spoke about that a few weeks ago at the Robinhood conference in New York, and previously our issues were their financial models telling you what their subscribers are worth, or these 30-year models that are just ridiculous. But we actually, we've shown that they are exaggerating the number of subscribers they have. They're actually 5 quarters ahead of where they really are. And the companies denied this, but they've given conflicting explanations. I'm kind of sitting here. I feel like the cat who swallowed the canary here, because I can prove that basically these denials are effectively lies. And I look forward to doing that. But that might be a 2024 thing also, given that we're almost at the holidays here.
We'll dive into that another.
Yeah, whatever.
9.3% right now, down about 10% in 2023. Clearly a laggard this year.
Okay. S&P trying to bounce. Looks like VWAP will start to flatten out if we do. Still in a tight range if you look on the far right, where price action is consolidating. We're not dropping off. We're just staying in this range above support 45.50 rather, and resistance overhead 4600.
Between energy stocks and crude oil futures, Caroline.
Yeah, certainly can. But like I said, crude oil down 4% today. I was just taking a look, trading at 69.40. So I don't think it's a huge surprise that companies like Exxon are under pressure today. But yes, I do think that it's notable that oil production will only continue. And last year there was so much talk of the switch to renewables and ESG, and it's definitely out of.
All right. Still fading. SPY still fading. It feels like one of those days where we're not going to go make any progress, any forward progress. Third down and 25. Have to put the field goal unit on. Apple with the bounce. Amazon with the bounce. Tesla still drifting lower. New York FANG with the bounce. Microsoft with the bounce. Netflix. Meta with the bounce. ABGO with the bounce. Google with the bounce. Okay. All right, I need to make something for lunch. Still bear flags. Doesn't feel like we're going to go anywhere. We have support below at 45.50, and hopefully we bounce before then. Give me 5 minutes, and I'll be right back.
Right, and we do know that also earnings outsized moves, especially for names that have performed as solidly as this name has on the year. So now, as far as some support and resistance and the price levels you're keeping on your radar, walk us through what you're thinking.
Yeah, so 3090, that's the main one that I would have my eye on to the upside right now here, because that was where we had this gap form around last earnings. Right, more like there. And that's also where we've repeatedly struggled to break above. We did make intraday highs beyond that point, but we haven't closed above it for weeks now here. The main point we would want to break above would be busting out of this triangle here. If we were to move beyond that, 34, where is a point where we topped out a couple times there, that could be one area to keep your eye on. I think that to the downside, there's plenty of support to pick from here. We've got all our moving averages relatively close together. Most notably, we have a point where we had a gap, and which is our dark green line there, lining up with our purple 252-day exponential moving average. So right around 2750 or so. Then we've got our triangle near 26. Beyond that, we've got our floor that I mentioned before coming in near 2350, which lines up quite closely with our volume profile point of control.
Right, absolutely. So a lot to think about here into their earnings event. So now trading this name, Alex, walk us through what you're thinking. I'm assuming leading into the fact that this name has rallied so substantially, and our narrative has been these names that are outperformers get punished.
Yeah, that's been the narrative, but also with this one, I would say that you're either a believer or you're not. This seems like a very binary stock story. It's tied to AI, and that's it. That's the story with this particular stock. So as I laid out in the last segment, it does seem like some of that excitement, at least as far as investment into that space from the retail investors as well as institutional investors has faded, and you see that reflected in the stock pulling back. So it's been a bear strategy, looking for a down move, post earnings in this particular name, buying a put calendar, selling this Friday, buying next, centered around the 25 strike, 20-cent debit, so relatively low notional risk here with just $20 at stake. Looking for a move towards 25. Now, there is a ton of strike availability, every 50 cents for the most part, so tons of different choices. I just happen to choose 25. For an investor who is bullish, tons of call choices as well for this strategy. So it's highly customizable, and it can be moved around to better fit a different outlook. This is just one way to look at it. Like I said, what seems like a stock that could be very divisive, you're a believer or you're not.
And you know what? That is also the same sentiment I feel like is our next name. That's GameStop, where you're either a very, very passionate believer or you are not. Of course, that follows what has been the meme cycle. This was like the original meme stock technically. And actually that movie that just came out about it is fascinating, even though we like lived through it. Still, I recommend watching it. But nonetheless, as far as the charting perspective goes, this name is all over the place.
Yeah, it is. You know, that's everything you guys said was spot on, I think, about some of the challenges this company faces here. But it's a really interesting chart, I think, because we have this long slide starting with our highs near 2765. We're currently down like 46% from that point here. But we did break beyond this trend line. We kind of drifted to the side first. Then we had a notable break to the upside. Now we're up about 26% from those lows that we reached right here just below 12. The recent term price action, I think, is really noteworthy as well, too, because we've got a rather large kind of stretched out bull pennant type pattern here. And what that means is we had a gap up, then we have price converging in kind of a triangular pattern here, as opposed to a bull flag where we have more of a channel type shape going down to sideways here. What you're looking for then would be a break beyond the pattern and beyond those old highs. That's kind of the way you would typically interpret this type of price action. Some kind of fundamental shifts happens, you have a bit of consolidation, and then it's gearing up for the next leg upward here. Now, I'm certainly not saying that's going to happen. I'm just saying that would be what you'd be on the lookout for if you're trying to trade this type of pattern. And it does look like, even though it is kind of stretched out and wide, that is the kind of situation that's shaping up here. However, I'm kind of a bit of a...
I'm here with you. I'm just eating lunch.
Hold on to our 63-day exponential moving average right now. We're near the lower end of our pattern. It's not looking too promising right at this very second here, but so much could change here. We've got earnings once again. That could be another major catalyst. Just an interesting shape to keep your eye on here, and a potential opportunity.
Yeah, absolutely. So now, as far as the momentum of this trend, for that potential opportunity, I'm sure the bulls in this name are loving that. What are you seeing?
RSI, once again, is showing a little bit of divergence here. So first, consider this part. RSI was trending down, while price was trending upward and making new closing highs. At the same time, we also had a situation on the lower end where price made a higher close, but RSI made a lower close as well. So we've kind of got both sides of the divergence happening here, both in that we weren't rising and we're falling worse in terms of momentum than prices. So that's not super promising, like I said, but once again, it's not uncommon for momentum to trail off as we have a major event risk situation like earnings here. So I don't know if I necessarily would make too terribly much of that. Momentum is still above the 50 midline. It is still more bullish here. But, it would be definitely something to watch if we get a break beyond either of these two kind of trend lines here in the RSI as well. And, just remember, too, that we would want to see a push to the upside. We would want to see a break above this trend line. At the same time, we're breaking above the trend line in price. That would be kind of a coincident situation that would help lend some credence to a bullish outlook in this name here.
So now, as far as price levels, keeping on your radar here, also with the earnings out today after the closing bell, so I'm sure we'll see some volatility. What are you watching?
Like I said, you'd want to see price break out of this triangular pattern and take out those old highs. If we were to see the bullish outlook for this type of pattern play out here. From that point on, maybe 18 would be a point to look out for. We've got a small gap that formed right there. We topped out twice around that point. That could be an area to be on the lookout for. It's a bit of a stretch right now in terms of the distance between where we are to that point. But, this is a move. I wouldn't put anything past it as we look out for this earnings event that's coming up here. It will be crucial to hold on to the 63-day EMA. If we do break to the downside, the gap is kind of what catches my eye here. Between like 1432 to 1355, that could be kind of a supportive zone. We've also got our yellow 21-day exponential moving average in the middle to potentially shore things up as well.
Yeah, absolutely. So really great takeaways for both of these names with earnings on the horizon. Rick Ducat, our chart master, appreciate it as always. Now trading this name, Alex, perhaps you're looking to please the meme stock crowd. I don't care for this name. I'll keep calling it that because
I don't know what is a meme stock.
I don't even really know what it is.
GameStop isn't a meme stock. I mean, the whole term was invented around that.
Yeah, that's true. The name never really made sense to me, but I'm going to keep calling it that. What are you thinking as far as an example trade?
Okay, so how I'm looking at this is, like the jar of candy you got on the counter, you kind of know better, but you can't stay away. You kind of keep going back to it. It's sort of like that with GameStop. You kind of know better, but maybe you want to be involved in this name, given the volatility, given the excitement, the attention that it gets. So I look at it in a way that's directional, but risk-defined and capital efficient. So very comparable to what we looked at in AI, looking at a one-week calendar spread, selling this Friday's 17.5 call, buying next Friday's 17.5 call for a 30-cent debit. It's only $30 at risk in this case. Looking for a move towards 17.5, which coincides with the market maker move based off of the current option prices, suggesting a 1 standard deviation range of around $2.5 on the roughly $15 stock. So, Jenny, your guess in many ways is as good as mine as to what will happen. But I know in many cases, many would like to be involved in some capacity. This is one way to consider doing that, using options in a capital efficient, risk-defined way, still participate in earnings, but maybe not so much that you're worried about it.
And at least this name is stabilized. I mean, we have seen some characteristics of maturing, but again, just hard to look at that longer-term chart and, of course, GameStop. But we will leave it there. Now, coming up next, it's time to recap the nice move higher today in Dave & Buster's. We're up about 5% on the session on the better-than-feared third quarter. We'll discuss that more coming up next.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. And other guys were charging $400 to $500. He just didn't want to do that. He's proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab look.
Tune in 24 hours a day, 7 days a week at SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for a look at a developing story with Caroline Wood, Senior Markets Correspondent for the network. So we're looking at Google's AI software, Gemini. Caroline, walk us through this story.
Hey there, Jenny. Yes, Google shares or Alphabet shares under pressure today, off their earlier lows, but still down about 0.4%. Kind of been a shaky start for tech stocks this December after a huge run higher. Google, Alphabet, no exception. And that's despite announcing the launch of its largest and most capable AI model, Gemini. It says the large language model is more powerful than anything currently on the market. Of course, hinting that it's more powerful than OpenAI's ChatGPT, which hit the scene first. Google executives said the Gemini Pro outperformed OpenAI's GPT 3.5, but it's unclear how it performed against ChatGPT 4. But, I mentioned Gemini Pro. There are 3 different sizes. Gemini Ultra is the largest, most capable category, Gemini Pro, and then Gemini Nano, which it will use for mobile devices. Google will license Gemini to customers through Google Cloud for them to use in their own applications. It'll also be used in apps like the Bard search chatbots. And, but, they did say that it is able to process various media from audio to video, but the Gemini algorithm won't be widely available until early next year because they're still doing some safety testing, which we know is so key with AI. Maybe that's why we're not seeing much of a boost to shares today on this news. They also introduced their Tensor processing unit for training AI models. That's called TPU V5P. That chip offers better performance than for the price than the TPU V4, which was announced in 2021. But we don't know how it compares to a key competitor, of course, NVIDIA. So we have to kind of wait and see on that. But, you just take a look. Alphabet shares off about 0.5% today. Microsoft shares off a little bit more than that, off about 0.8%. And NVIDIA down almost 1.5% today. So not really seeing much of a rally in any of these names. So Alphabet is kind of in good company in terms of the red arrows. But if you take a look, Alphabet shares up almost 50% in 2023.
And it just feels like this name has played catch up in the AI arms race all year long to OpenAI. And they're not the only name challenging, of course, that company. As we know, Elon Musk's AI startup has said they're also going to try to challenge OpenAI. So everyone wants a piece of the AI enthusiasm. But as far as specifically Alphabet goes, what does the street feel about this news? Because like you said, it's clearly not much of a reaction today, but also the Magnificent Seven have just seen some disappointment this week.
Yeah, it looks like Meta and Tesla are the only 2 of the Magnificent Seven higher today. So the street, not necessarily, all that enthused by this Gemini news. That being said, if you take a look at the analyst community, more than 80% of analysts still have a buy rating on Alphabet shares, despite the fact that it is up pretty significantly. It's not seeing NVIDIA size outsized gains, but it's still up very significantly in 2023. So 82% have a buy rating, not a single sell rating on the street at this point. median price target of 152 implies about 15-16% upside from current levels. So the Wall Street analyst community still sees upside potential for Google, not just because of AI, but I'm sure due in part due to its AI capabilities. And yeah, we have to see. OpenAI is the one to beat at this point. And Google says this is the best thing on the market right now. So let's see.
I know, what a big claim to tag on to your software. I mean, I guess I respect it, but as far as Alphabet goes, we know that in terms of their search engine, it's the best and the biggest in the business. So typically what they do well. We just have to wait and see, because this is like a long-term story I'm sure we'll be watching. But appreciate the insight, as always, Caroline Woods, New Markets correspondent here for the network. And I'd like to bring back in Alex, and it's time for FOMO. So we are looking at Dave and Buster's, which is a place I do not think I've ever been to, actually. They closed the one that was in the city near me, so that was perhaps my last chance. But hey, nice.
All right, so another bear flag. We just continue to fade today. Let's take a look at the daily chart. S&P.
Yeah, this is if we get a 5-year chart at some point up on the
Okay, S&P 500. That's looking a lot more bearish. Shouldn't be a surprise. We're still consolidating. For the past 6-10 days, we've just been above 4550 and below 4600. Exhausting both the bulls and the bears. The bears are winning today. If you bought the high of the day, bought puts at the high of the day. Just about everything fading a bit.
But Jen, you got to make this report reaction make sense to me, because I didn't see positive in this. It's been an outperformer on the year, yet the stock's higher. So it like breaks all rules. So again, rules are proved by the exception.
Uber looking for an end of day run. Uber, it's starting to tick higher. Uber. Arm Holdings, no follow through yet. All right, let's see. Let's take a look at the number of stocks. What stocks are moving today? On the S&P, it's still Campbell Soup taking the number 1 spot. Campbell Soup. Gap up. Albemarle. Carnival Cruise Lines fading from the high of the day. United Airlines. The airline's looking good. Delta. LUV. Southwest. Moderna. Fading off the high. What is that? Bath and Body Works. Bath and Body Works. That looks pretty good for retail. Volume the previous couple of weeks on Bed and Bath Body Works. Bath and Body Works. All right. Bitcoin still consolidating. Nothing to do there. All right. We're approaching 145. All right. Trying to turn the corner here. SPY, S&P.
Picture Dave and Buster's as maybe more for kids, or even maybe some young adults as well. Even the parents can maybe enjoy themselves while the kids are playing on the games and things like that. So
An adult-centric company. I think it's like the adult Chuck E. Cheese. That's how I see it.
yeah, maybe I'm just not in that market, but that's neither here nor there. What I want to look at this though is what you described, which is massive spend in the remodeling on a plan they probably have to do if business isn't clicking on all cylinders. You've got to think about outside the box, think about ways to spur growth again. But this is sort of a hopeful plan. There's nothing in the plan said this is going to work. So you're an investor. You're investing in a company that's spending a ton of money, and then it just hopes that it works. So that's the scary thing, I think, for investors. And over the last few doesn't do much. Just kind of chops up and down between about 30 and let's call it 50.
And losing money, like they're not profitable now. Their losses are much worse than they were a year ago. Their same-store sales were down from pre-pandemic levels. So I mean, even though they beat, that doesn't, I think, tell the whole story. So I like to typically look at numbers on a year-over-year basis, but nonetheless, still a nice move higher today, and still up 26% this year. It's amazing, actually, to me to see the outperformance of Dave & Buster's. Who's trading the same. What are you thinking? Because I guess the momentum today.
All right, still looks like a bear flag. VIX at the low, 1280, starting to bounce.
The top end of the range has been somewhere around $50 a share. And so I look at a strategy that would benefit from a move around $50 a share. Looking at buying a call butterfly. Now, we didn't skew this at all. This is a traditional equal distant butterfly spread, which we're buying the 45-50 call debit spread and simultaneously selling the 50-55 call credit spread. So that converges at 50 and creates what we know is the butterfly risk profile. So you have risk in both directions, but that risk is going to be limited to the debit spent. So in this case, going out to January, no earnings to worry about for another quarter, at least scheduled releases of earnings. Dollar debit, unstructured risk. There's two break-evens. The first one is at 46. You simply add that $1 debit to 45, and then to get the other one, you simply subtract $1 from 55, and you're left with 54. So $8 wide window between 46 and 54 at expiration where this can be profitable. With the more closely it trades to $50, the more it can potentially make with a max profit of upwards of $400 for each one of these butterflies. So when you look at this, Jenny, it fits into a couple things. FOMO feeling today, positive. Recent price action of the last few years suggests that it struggles once it gets up to this level. So looking for a test of those highs, but not going much beyond that.
Right, looking to just see things sort of stay put, if not move slightly to the upside. But we will leave it there for FOMO. Now, coming up next, another name that's moving to the upside today, that is Shake Shack after a Raymond James upgrade. Shares are up almost 3% on the session. Your media will have more on that story coming up next.
More selling.
Young lady who was in her 30s, a couple of kids, recently went through a divorce. She had a lot of questions. She came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were in trouble. The client won't care how much you know until they know how much you care.
All right, kind of a slow grind lower today.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
S&P still grinding. Bitcoin above VWAP, but not able to do anything. It's just up here in this doji and the top of yesterday's price action. Not much going on except for those stocks that are being bought up. Let's see. I'll scan through a few more of these. Walgreens, Boots Alliance starting to move, similar to what we had with CVS this morning. CVS quick to take profits. Walgreens looked pretty good.
Welcome back to Next on Investing. Alex Hobbs joined by Jenny Cornan. Joining us now is Renita Young, senior markets correspondent for the Schwab Network, to discuss some burgers. We take a look at Shake Shack stock making a nice move here today, Renita. I'm guessing on the
Shake Shack.
Oh, absolutely. Shake Shack shares are saying that 5 times, by the way. Those are higher today on an upgrade over at Raymond James, who took this stock to a strong buy from an outperform and kept upgrading a price target on this stock of $78 a share. That's around a 23% move to the upside from where it's been trading today. Now, this analyst believes that the company is still in the early stages of improving its margins and lowering development.
Shake Shack. Shack Shack.
Idiosyncratic opportunities for Shake Shack into 2024 to be able to increase those margins more and possibly stimulate even more traffic at the stores at the actual restaurant. The analyst also believes it could be an upside to consensus estimates for 2024 expectations. Raymond James, though, does acknowledge the macro conditions that could remain, but they believe that the improved demand trends in October have actually held up pretty well to do so in November, and that this trend will likely continue, even though there could be a little bit of softness depending on because of the macro conditions. Also, menu prices, they're at around about a 3.5% increase year over year, which means that they have room to grow in early 2024, according to this analyst. And when it comes to share price action, Shake Shack is up around more than 50% year to date. It has a current outperform rating, average outperform rating, at a price target range of between $56 and $85.
$78 price target on Shake Shack. Okay. So if it clears the 200-day, it tried to get above the 200-day this morning. Shake Shack, they're talking. Looks pretty good. $78 price target. Raymond James, that would be over here at these pivots. That'd be the right side of this pattern. Looks pretty good.
Because it's going to boost its capital expenditures, of course, during that time as well. And you can expect
Shake Shack looking for a follow through. Looks like a good long. Okay.
Whether or not McDonald's will get Ozempic still remains to be known because it is a very cheap meal for people who might be needing it, for people who may not have any other restaurants in their neighborhoods, and that's the thing that McDonald's has banked on for years.
Way too much money at McDonald's. I can't even actually admit because it's quite scary how I feel like it's not as cheap as it used to be, but I guess nothing is. So that just is an overall theme right now in terms of eating out. But we will leave it there. Really great breakdown on the fast food space and some of the trends we're seeing in Shake Shack and McDonald's. Renita Young. Now coming up next, it's time for Under 30. We are looking at Sentinel One, which is making a nice move to the upside today, up over 15%. George Schultz will have more on that for us coming up next.
Shake Shack. It looks pretty interesting. I'm just studying the earnings, etc. Shake Shack. Looks pretty interesting. earnings wise.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hincks. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond.
Okay. Shake Shack, I like the idea. Looking at it for a potential trade.
Welcome back to Next Gen Investing. It's time for Under 30. We're looking at Sentinel One, cybersecurity software stock. Jenny, a name making a nice move here today. And there you go. Underperformer, I would say, ish over the last few years. Maybe not this year, but big pop here today.
Big pop here today, but the path to profitability still remains. I mean, they did give some guidance, but I think that is still sort of front of mind for some of the investors. So here's tell us now more on their most recent quarterly update. I'd like to welcome in George Tiller, senior markets correspondent for the network. So George, walk us through this nice move higher today. Now it's up over 60% this year.
Yeah, I mean, this is an interesting one. I mean, we talked about some of the major players in the cybersecurity space all year, which as an industry group actually performed quite well because you have to think about cybersecurity as an enterprise sort of mission critical spending. In other words, enterprises aren't going to come back. In fact, they're going to increase spending. Sentinel One is a cybersecurity that's a protocol-based provider. They actually have strategic partnerships with some major players like Amazon Web Services and Microsoft. It's relatively new company from a publicly traded standpoint. It IPO'd back in June of 2021. It actually moved quite a bit to the upside going back to November of 21. It was trading around $78. That suggested at that time that this company was growing, but not growing at a reasonable price. But if you actually look at this report, I think it's actually quite interesting because considering the earnings, they lost 3 cents a share. The expectations were 8 cents of a loss. Now, if you compare that to last year, I mean, they lost 13 cents for the same quarter last year. So the losses are improving, and as you get into those low single-digit dollar and cent ranges, in other words, pennies, to give you an idea, the company's getting closer towards adjusted break-even. I think that's important here. If you look at the sales, they also reported an increase of 42%, 164 million, higher year over year. The other thing is their number of customers is over 11,000 now, and they also denoted that their revenue retention rate is over 115%. And that's important as well because that gives you an idea that not only the number of customers growing, they're actually getting more dollars spent on existing customer base. And that really speaks to improving profitability profile. Just looking at the trajectory of earnings in the last 4 quarters versus the forward 4 quarters, this company's getting close. And I think this is important because if you just consider the price action in the stock, looking, let's say, on a 2-year weekly chart, you'll notice coincidentally.
All right. Markets are just grinding sideways. Bitcoin, watching that.
been quite underwater for much of the last year and a half from that initial public offering price. There's still quite a bit of institutional investors in this name. How do you balance those two things with so many investors?
All right, starting to see a little bit more flow coming in on the S&P off the low here, shorts covering. Are watching S&P, looking for a follow through. Bitcoin not doing anything. All right, let's keep an eye on S&P. S&P looks better. Starting to come off the low, headed towards VWAP. That'll flatten VWAP out. Doesn't mean that we're looking for price action to get back to the high of the day today, but it does mean that it'll help to flatten out VWAP and keep prices contained. If you look at the daily chart, very ugly candle today. I'd like to see that less ugly. Okay, Rivian. Rivian made a nice move earlier. Rivian, let's see what that looks like now. Okay, a little fade from 19. That was a nice squeeze into 19. If you had those 19 calls, you're probably happy. Happy.
I remember when I first started flying and experienced turbulence, I would watch the flight attendants. They're not nervous, but I'm not nervous. Financially, I'm a flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Then watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next trend investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out, Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week. SchwabNetwork.com.
Very slow day. I got a few blocks. It's a Wednesday. Not a whole lot to talk about, unfortunately. We've had 5 weeks up basically 4 weeks up and then sideways for a week. And consolidating, we haven't dropped off, so that's a good thing if you're bullish. We ran up 12% from the October low. Got near that July pivot high. Consolidating and a little bit of a fade today. We're off 10 cents on SPY, trying to go green on the day. All right, no follow through on S&P so far. Microsoft is rising. All right, let's take a look at some of these. Microsoft, we had a third day from the reversal, if you recall. We had a doji, or not a doji, it's a long-legged doji. Not quite a hammer, doesn't have a head. Just a long-legged doji. We reversed yesterday, followed through, and today we're looking at the buying volume that's coming in here. If we start to see stochastics turn today, tomorrow, probably tomorrow we'll get a crossover. That'll look pretty good for a potential trade. So that's Microsoft. Meta's trying to hold on to this turn, holding on to the 50-day. We're still watching that one. Stochastics turning, so maybe we'll get a full turn by tomorrow or today. NVIDIA, a little fade on NVIDIA. So you can see what we're looking for. We're looking for that confirmation day. So far, just a lower high. RSI was starting to head towards 50 and turn back down. So stochastics oversold. This is good. Could do what it did over here at double dip last week of October, where we made a lower low. So you don't want to get stuck in NVIDIA by doing something too early. Just keeping an eye on it. So that's another one. Snowflake still consolidating. Snowflake. Okay, day 5 in this pennant. Just draw a line through the wicks of the tops and the bottoms. You got a little triangle looking shape, looking for a break to the upside. 921.50. 50 days crossing up through the 200-day today. Actually, probably did it yesterday, but looking good.
a loss of 3 cents per share, narrower than the 8 cents per share loss that was expected. Revenue rose 42%, $164.17 million. That also easily topped analyst estimates. They provided upbeat guidance, also said that their progress toward profitability remains a bright spot. And then this really stood out, saying a slew of recent high-profile attacks showcase the enormous consequences of breaches costing hundreds of millions of dollars, lost business and disruption. Events like these are constant reminders of why cybersecurity remains the top priority for CIOs around the world. So making the case for cybersecurity, of course. We got a flurry of bullish analyst activity following this, with several price target hikes from UBS as high as $29, Morgan Stanley raised to $25, all in the buy camp. Median for SentinelOne now $25 a share, currently trading at $23.25.
All right, Caroline, thank you for all those stories. Appreciate it. Sure. Now let's take a look at the bigger picture. Russell Stone's with us, CEO, owner of Scranton Financial. Russell, what do you make of where we are here? Do you think there could be a Santa Claus rally?
Well, I would say by most definitions, we would probably say we're in the Santa Claus rally, but I don't think it's because the fundamentals of the economy are any good. I just think it's because there's a fear of missing out. There's some momentum in the markets, but it's, the animal spirits left over from the optimism in the markets peaked out. It's peaked out in 2018, 2020, 2022, and here we are.
S&P grinding back towards VWAP. VWAP is flattening out now.
Do you think gold has more room to run? I know it hit 2100 recently. Today you have it at 2047 a troy ounce. Gold and silver is something that you follow closely. Your thoughts? Would that be something that you would advise to folks?
Well, anybody tracking gold and silver in markets overall, they're confused because we have rising markets and gold and silver peaking out, particularly gold hitting an all-time high. It doesn't really happen.
All right, trying to push a bit higher. I know it's boring. Sometimes we get this kind of price action for the past couple of days. Hasn't gone much of anywhere. Robinhood, big pop in Robinhood. Jeez. What the hell?
So if you say gold is not acting exactly the way that you're used to it acting, and we have seen it at this new high, what would you recommend to folks as actionable advice, I should say, to investors?
Here's what I say. If a person has a percentage of their portfolio invested in physical silver or gold, I would start off by buying physical silver for 5 or 10% of your portfolio. That is important, not certificates, not obligations on silver certificates or gold certificates, but physical gold or silver. And then from there, you just kind of take a step back, dig some foxholes, get into them with your investments. Use money market accounts that only use treasury bills. Pull back from the stock market a little. Prepare yourself to be a buyer at the bottom of the market. There is going to be a correction. We can't avoid it, and that is going to happen. When it does, you want to be a buyer, not a seller. Makes sense. And to have gold to back up your gold and silver to back up your portfolio is just smart money management. Everybody should do it.
You know, they often say if you have only money in cash, then you miss the 10 best days of the year and you don't get the returns. But you're saying cash is king. So do you get torn because you might miss the best days?
Well, I would look at it this way. If you're a day trader and you're good at it, then fine. You have to look at the micro picture. But if you're an everyday person going to work and you just contribute to your 401k plans and your investment accounts randomly, then I would say you have to look at the macro approach and take it seriously. The worldwide debt, the Fed and the Treasury struggle with monetary policy because the dollar's been fully depreciated. So I would say you have to take a defensive approach. If you're a good day trader and you're disciplined, by all means.
Okay, market's just chopping around. Robinhood. I don't know what happened with Robinhood. Nice volume. Did they have earnings? I guess so. Shorts covering. Someone sold a bunch of puts. The 4,850 of the January 2026 10 calls bought, and 2,000 of the 2026 12 calls bought. 15 times average in just 2 hours. S&P, no follow through yet. Oh, okay. Thank you, Rob. Bitcoin taking a break today. A lot of stocks taking a break today. Royal Caribbean doing okay. The cruise lines, the airlines doing well. ALK, Alaska Air, off the best levels of the session.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical specs. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere.
All right, bear flag, no follow through.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The watch should be on
Welcome back to the watch list. I'm Nicole Cavalides, live on the floor of the New York Stock Exchange with some more movers in the market for you right now. Campbell Soup is the top gainer in the S&P 500 today after saying it may outpace Wall Street estimates for 2024. The company's fiscal first quarter earnings were in line with expectations, showed a decline in earnings revenue year over year. Campbell's will also update its pending acquisition of Circle
Bitcoin, S&P. All right, looking for some sort of momentum that isn't showing up yet. Microsoft bouncing. Yeah. Still only 3 of the FANG, New York FANG index stocks. 3 of them are green, 7 are red. NVIDIA, almost a bearish engulfing candle on this reversal. That wouldn't be good. NVIDIA. Higher low starting to print. Can we get back to VWAP at least? That would make things look a lot better. That would indicate buyers are still here on the dip. It is pretty slow, so I'm not seeing a lot of volume. It's 1-to-1 on the NYSE, 2-to-1 on the NASDAQ. The cumulative is still negative, so that's telling us to take it easy on the long side. Mara starting to bounce. Maybe Bitcoin gets going here. Tried a couple of times, didn't do anything. Snowflake, flat VWAP. Apple, flat VWAP. Apple. Shake Shack, looking for that to move. Shake Shack. All right. Looks like we're not going to make it. Looks like we're not going to make it back to VWAP, at least not right now. It's 2:20 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, December 6th, 2:20 in the PM. All right, more selling into the close, into the last couple hours.
So if someone wants to get started on this kind of distressed investing, what should they do? Who should they call and where should they put the money?
I really would advise that, investors, when they're thinking about this, it's really best to work with a professional money manager. Feel free to call Chelsea Asset Management if they want, or different one. It's not something that you just sort of pick up day to day. Investing in distressed situations can be very complex. It helps to have legal training because there's lots of complexity. There are often legal issues. And most of these cases, frankly, they get worked out through bankruptcy court proceedings. So being a lawyer, having familiarity and special training that goes into understanding them really gives you an edge versus other players in the market. You see it time and time again. There are often situations where stocks of companies that are bankrupt, like WeWork, for example, they move up and down without any fundamental news, and sometimes call them meme stock or stock growth, things like that. That's
Mm-hmm.
a lack of understanding. Ultimately, shareholders in bankrupt companies almost never get a recovery.
What do you tell folks who say, I like to do some stocks and bonds? Is that okay?
Yes, I think most investors who listen to your program should have a balanced portfolio, and interest rates have climbed, so it probably makes sense to have a little bit more fixed income exposure now than it did during the peak of the fixed income bubble. Maybe just adds a level of diversity.
NVEI. Okay, look at that one. NVEI. Never heard of it. Nuvei Corporation. Yeah, it looks pretty good. Grinding higher. Nice volume, too. Their acceleration.
What about the Magnificent Seven? Do you think there's opportunity there? Just picking winners of last year. Are they the winners of the future?
So these are great companies, undoubtedly. But the problem is when the market blindly throws capital at just a few companies and expects them to be the solution. You really get what you pay for with that because companies.
Futures just sitting here near the lows of the session.
They're attractive at the right valuation, but when everybody's blindly throwing capital at just 7 companies, eventually things will change. We've seen that playbook before. Looking back in the past several decades, at one point there was the Nifty 50, and a similar thing happened. 50 stocks just continued to go well, to go up and do well, for a long period of time. And then eventually investors thought that was the only way to invest. And then, of course, the bottom fell out of those Nifty 50. I think the same thing is likely to happen here. It's hard to time it and know exactly when. But one thing is for certain, they're not going to grow to the moon.
All right. I remember the Nifty 50. George. All right. Thank you. George Schulte, Schulte Asset Management. Thank you. Coming up next, the challenges still ahead for getting inflation right to the Fed's target. Can they do it? What does it mean for a soft landing? Coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM for cash withdrawals worldwide.
Still sitting here near the lows. Trying to get back towards VWAP. Microsoft looks very similar to S&P. Price action. Okay, so we know we got a pretty bearish looking daily candle. So any help from the bull side to push this back would be good. We're only 50, only off 60 cents on the SPY. 6 handles. 6 handles on the futures. It's not a big day. We did gap up and then fade. Tick Cumulative is still telling you to take it easy on longs at the moment.
Every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Lane.
Welcome back to the Watch List. I'm Nicole Penalidis, live on the floor of the New York Stock Exchange. We've seen a lot of moves in this market, and we welcome in Darius Dale, founder and CEO of 42 Macro, to give us some ideas here. You know, we've seen a very resilient consumer. We've seen an incredible move for stocks for 2023. You wouldn't know that August, September, October were quite tough. How are you feeling between now and the end of the year?
AMD pulling back a bit. Amazon trying to bounce. Bitcoin bouncing. Shack trying to bounce. Bitcoin just hanging out along VWAP.
Yeah, I'd say the outlook for 2024 is, in our opinion, I think the most important thing investors should do is avoid pigeonholing themselves into either the soft landing camp, the hard landing camp, or the no landing camp. I think we all need to be a little bit more humble as investors about the future prospects for the economy, future prospects for policy, and ultimately just be in position to respond to those changes in the economy and changes in the markets.
Are you worried about a recession or a deep recession or anything like that?
No, I think when you have proper risk management in place, as we do, and as our clients do in 42 Macro, you don't have to, live in perpetual fear of things like recessions or
S&P still fading.
To us, it's all about understanding what market regime we're in. We're currently in Goldilocks and orienting our investment posture to account for that.
So at this point, when you try and give advice to folks what they should be doing, what do you tell them? Because obviously you do still have volatility, you do have rotation. We had tech doing so well, energy had been doing so well, but then energy was the loser of November. But market growth has improved. What would you say to folks as an investment advice or strategy?
Yeah, this is an excellent time to be invested, fully invested as an investor. When you look at the technical signals.
Home Depot just been moving sideways. It's up $3 on the day, 1%, but just flat VWAP. A lot of stocks with flat VWAP at the moment. Royal Caribbean. Mara, flat VWAP. Tornado, flat VWAP. Airbnb, flat VWAP. All right, we'll continue to fade S&P.
It's really about gaining conversation around when does the Fed start to cut. We think market expectations are a little bit ahead of themselves right now. But that does not necessarily mean the market, the stock market or the bond market are in for as a function of that.
Yeah, I see January 12%, March 60%, May almost 88%, and so on. June, basically there's almost 100% chance in the first half of the year. Does that sound right to you?
No, it doesn't sound right to me. But again, as I mentioned earlier, it's not about the outcome that happens in financial markets or in the economy. It's about being positioned to take advantage of what happens in the markets. And so, as I mentioned earlier, the market can price in a soft landing. Then after that, it can start to price in a hard landing or a no landing. It's our job as investors to save money throughout that entire process, as opposed to trying to predict the outcome and positioning for that.
So you mentioned some names abroad. Is there opportunity abroad?
Yes, there's opportunity abroad, but in our opinion, the later in the business cycle you go, the more high quality, high grade you want to make your investment.
Trying to bounce. VWAP flattening out a bit more. S&P. Spiders. Trading 83% of its daily range. About 26% of its ATR. Only pulled back a little bit.
Systems tell us we're no longer in growth phase. Right now, the systems are telling us that it's safe to continue to orient the portfolio in accordance with growth levels.
Tell us more about the quantitative systems. I mean, who decided these? Who made these? Wrote this?
Bitcoin waking up. Microsoft waking up. Microsoft is waking up. Tesla trying to print a higher low. Apple trying to wake up. Still flat VWAP.
Specifically, in terms of the SIGMA market regime signal process, we're looking at 42 market-based indicators, scrolling through the lens of our volatility adjusted momentum signal to get an indication of which regime the markets are actually moving towards pricing in, and also to determine whether the markets are pricing in to too much of a degree. We have not achieved that yet.
So, are you interested in the jobs report on Friday?
Yes and no. Yes and no.
I mean, I'm not even being facetious. It's because we're using, I mean, it has been 42 macro. We're using those 42 points to evaluate the strategy. But at the same time, we want to see something on Friday, right?
Of course, and I think it's important to separate the research from the risk management. So with respect to the jobs report, on the research side of things, what we're looking for are data that can sort of shape the market consensus away from soft landing. Right now, soft landing is the overwhelming market consensus.
Right.
If we get data that says a no landing is more probable, or data that says a hard landing is more probable, then this Goldilocks regime is at risk. But in our opinion, based on the qualitative research we've done in our monthly macro scouting reports, we are not quite ready yet for the breakdown in the total performance.
So if it's a hard landing or moving to recession or something, how would you change that investment? You wouldn't do large cap growth.
No, you'd obviously not want to be in net.
What would you want to be in?
Yeah, you'd want to be in this fixed income allocations, particularly investment grade fixed income allocations. Mortgage-backed securities are great.
A little bit more bullish flow coming in. Just shorts covering it, looks like.
It's really about the interplay between asset markets and the liquidity function of the markets.
Oh, nice. All right. Darius Hill, nice to see you. 42 macro. Thank you for joining us. Still ahead, second half of our show, look at potential opportunities in emerging markets, potential benefits.
All right, if they're going to do it, it's 2:33 on the East Coast, 2:33. It is December the 6th. If they're going to do anything, this is the time of day we start to look for it. SPY with a buy signal on this little bounce here. Tesla, still fading, Tesla. Meta, a little 5-minute buy signal. Not much to do here. Boring day.
award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Every morning, every trade, always live. Expert earnings analysis.
Very boring day. No momentum. Snowflake. Home Depot.
Trade live on the Schwab Network. I'm Oliver Renner.
Home Depot following through today. Trending.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Mara. Would like to get Bitcoin. It's already been extended quite a bit, so consolidating is not a bad idea.
And available on all your favorite streaming services. Futures with benefits every weekday, 8 a.m. Eastern on the Schwab Network.
S&P. Dow Jones, Walgreens Boots Alliance, still number one on the Dow Jones, followed by 3M. 3M looks pretty good for the flag breakout. Boeing breaking higher. Home Depot. Disney trying to turn. Nike. Goldman Sachs, inside day. Caterpillar. All fade. Honeywell, inside day. And Verizon.
Hey, Nicole, kind of a mixed bag for the most part. A market that's really in a bit of a holding pattern. You mentioned digesting some of the jobs reports we've seen this week, JOLTS number, the ADP, and ultimately all of it suggesting that we're starting to see some weakening in terms of labor conditions here in the U.S. And I think that's raising some concerns ultimately. I think what the Fed wants to see in many instances in the sense that it's slowing and not necessarily cratering, but as I take a look at the SPX here today up to 4590 before pulling back, so just shy of 4600. I saw the NASDAQ up to just shy of 16,000. We're actually looking at the futures here right now and a couple of the major events that we've seen throughout
Dow Jones.
November to remember. The question is
Small caps. See what those look like. Small caps. Ooh, you know what looks pretty good here? Rounding bottom on Livent. Libent. Livent. THM. Lithium compounds for use in applications that have specific performance requirements. Livent. Rounding bottom.
September highs, but just short of the highs that we saw earlier this summer, this year in July, up around 46.34. So I mentioned the ADP this morning at 103, down from 106 in October and below consensus for 130. But I think the real focus here, Nicole, is on that non-farm fuels put that's due out Friday and could possibly be in a bit of a holding pattern until we get that release.
All right, and then I couldn't believe my eyes. It went below 70, and that is crude oil. What's going on?
Yeah, if you're looking at crude prices and following prices at the pump for that matter, then it's definitely very appeasing for the bulls and supportive of what we're just talking about in terms of stocks on the move higher, right? Crude's come off significantly today, down to below $70 a barrel amidst some of the demand concerns, mentioned jobs, slower than expected labor conditions here. That's always going to raise some concerns. And
Here you can see the WTI, the futures down to 69.11. Again, job concerns or job demand concerns associated with the job slowing economy, right? Means less consumption. OPEC, they don't, I think oftentimes when you get large unexpected cuts, traders think, what do they know that we don't? And obviously, China's a major focal point. We heard Putin talk about how even those cuts we heard from OPEC, they were going to take a while to implement. And, again, supply here in the U.S., we've got record production.
S&P putting everybody to sleep. Never short a boring market. Okay, Mara's trying to do something here. Market's just doing nothing here. Watch Mara. Mara's trying to move. Mara is trying to move. Let's see. Bitcoin, Riot. What's Coin doing? Riot pull back. Coinbase. Consolidating for a third day at the highs. All right, we're sitting right above 45, 455, 456. S&P above 4550 support. All right, Mara's trying to tick higher. Mara trying to tick higher. Mara trying to tick higher. Back above VWAP. Still got a lot of work to do. Oh boy. Not much going on, folks. S&P, there's just no momentum. There's a few stocks that broke higher, but obviously you don't want to chase them. If they get a follow through, we'll be looking at these again tomorrow. Small caps. Many of these small caps are bottoming and turning. A lot of these small caps are turning at lows. S&P 600 small caps. Clearfield Communications, Clearfield. Flattening out. So as far as underperforming, these are stocks that some people will be looking at to trade. I'm not particularly fond of them, but with everything else at the highs, like NVIDIA coming off the highs over the last 10, 11 trading days, we're still looking for bounces here, but these stocks underperforming, I don't know. I just not particularly fond. Got a nice little bounce there. Consensus Cloud Solutions. What do the mid caps look like? Mid caps. Leggett and Platt. Nice reversal. You can see these stocks that have pulled back. Some people coming in and risking a few bucks for some upside. Over 10% in the last 2 trading days. Up 5.5% today. Again, it's not my Tempur-Pedic. Nice reversal off the lows. Tempur-Pedic, Polaris, turning the corner as well. Helena Troy, nice turn here in some of these stocks. Helena Troy, aren't they? Oh, they make hair dryers, mirrors, hairstyling items, etc., and appliances. Avis Budget, trying to turn the corner. Travel and leisure stocks. ZoomInfo, that one looks pretty good. ZoomInfo breaking trend. ZI breaking downtrend. All right, more fade. S&P still at the low, grinding. Looks like we're going to test the lows again. 455 is support, 4550 on the S&P.
helps enterprises get their data strategy in order before they can build AI applications that benefit from this whole AI trend. So vector search is part of that MongoDB just announced this week. It went GA, so they already seeing the demand for their public preview. So we're not seeing any revenues from that product yet, but I think it's all accountable as the AI trend takes off, as customers build more AI applications, they'll need these building blocks to build those AI apps. So MongoDB is definitely one of the beneficiaries as customers build more AI apps.
Joseph, final thought?
Yeah, I agree. Vector search is a great product roadmap. They also have Relational Migrator, another new tool for them. So product roadmap is fine, and that would be my last remark.
Thank you both so much. Taz Kajalji of Wedbush, Joseph Bonner of Argus. Thank you both. That's going to do it for us here on the watch list. Thanks for being with me every single weekday here live at the New York Stock Exchange, 11 a.m. and 2 p.m. here on Schwab Network. Keep it right here. Oliver Rennick, Market on Close, next.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, this one.
This is me adjust the base, add more guitar, maybe some drums.
VIX still sitting here at the low 1270. All right, FANG stocks. It's a slow day. All right, starting to see Broadcom push higher. Tesla's starting to move. Tesla, watch Tesla here. Tesla moving. Netflix, higher highs. Okay, let's see what Netflix looks like. Netflix. Okay, needs to get back through VWAP. Meta still chopping around VWAP. Pretty much everything is flat VWAP, no momentum. S&P still testing the low.
Example trades and stock-specific analysis featuring smart
No politics, no noise. Analysis ahead of the biggest events for the economy.
from bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, powering every investor and trader.
Every market day. Binge watch the market with Schwab. Tune in 24 hours a day, 7 days a week at SchwabNetwork.com.
All right, looks like we're going to test the low here.
Schwab Network. Available anytime. Schwab.
On the latest commodity action on Future with Ben Lichtenstein, weekdays at 8 a.m. It's the Schwab Network. Available anytime, anywhere, on any device for
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
soft data, a bit in the bonds, serving as a backbone of the overall risk-on sentiment. And cuts still getting priced faster and sooner and deeper by the day, basically. S&P a little change to the downside. NASDAQ a little red. Russell 2000 is your winner on the day.
No trend day, just fade lower.
Russell ripped, start off the session. The NASDAQ goes up early pre-market. Some kind of flip-flop. Bitcoin still hanging out into these mid 40,000, doing just fine, not bothered by much, kind of in a world of its own. The dollar that did turn higher throughout the second half of the day, especially as equities have faded. I continue to watch that dollar. It seems like it is catching a little bit of a bid when you use that tech-heavy strength.
Netflix starting to fade.
Certainly, again, the key development in the last month. Now, notable though, a little bit of chart action here. Kind of through a sideways triangle there in the last 4 days of trading on the 2-year yield, because the drop pretty quickly last week. Yield on the short end really broke down as we accelerated.
All right, we're starting to take out, gonna take out the low here. About to take out the low.
Really just the 2-year. You continue to see a lot of powerful buying on the 10s and 30s, further out the curve as well. Trying to figure out if we should be rooting for cuts or not. Is the Fed going to cut just because inflation's coming down, or is the Fed going to be forced to cut because the economy is deeply rolling over? Our numbers kind of really take the range. And we did see a little bit of a breakdown in some of the economic data for labor this morning, with some of the ADP numbers pointing towards some softness in the services category. Here's the dollar, though. Interestingly enough, going up now, going on 5 days straight. Not a big move. The dollar did get walloped, of course, here over the past month. All those cuts being priced in. You can interpret it a couple of ways. Maybe the dollar downside is limited if the rest of the world is still worse. But right now, we're essentially pricing a similar timeline for Fed reversal as ECB reversal. So maybe the dollar here just still acts as a bit of a hedge or a safety trade when tech doesn't work. That's what I've noticed. That's what I'm going to generally interpret it as we did see some of the softness creep in names like NVIDIA here over the past week. We're getting a little bit of a bid in the dollar. I don't think those things are coincidence. But that can be really fewer things to point out. The business today is actually crude oil, down at 4% below $70. WTI, another debate there on what's the cause of the weakness. Is it just a bunch of oil coming onto the market? That's what I've argued. And too, for some time, that U.S. oil production, the big story, more oil coming onto the market from other big producers around the world. However, I've also said that once we get down to the lows of the year, which we are getting close to now, maybe we do need to be a little bit more aware about the potential of oil signaling some kind of lack of demand or recessionary rollover type of event. I don't think we're there yet. Look at the overall travel that was very robust around Thanksgiving. Not really a convincing argument that there's a big demand problem here. It seems like still pretty good supply-driven argument to be made for oil's weakness. But you get down, break through the year-to-date lows, probably deserves a little bit more attention. To get some more insight on that, I will be watching other commodities, namely copper, because the move in copper has gone the other way. It's generally been quite strong the last month, but you're seeing in the last 3 days, copper gets smacked around too. Today, included, copper's down right now about 1.25%. Copper starts falling off the curve.
All right, looks like we're gonna make a new low right here, or at least they're showing it. Taking these stops out. All right, Meta dropping off here. Meta. Okay, so let's take a look at Meta on the daily. So far, I've been holding on to the 50-day, but it looks like it might lose this level. At least that's what it's showing right now. Microsoft starting to bounce. Amazon. Amazon fading. Meta. Good thing about Meta is it's oversold on stochastics. Doesn't mean it can't dip a little more, but I am watching this for a bounce and a follow through. Market's kind of slow. We were just reviewing some of the stocks that are near the lows starting to turn. These have a better opportunity, most likely, than the FANG stocks at this point to turn off these lows. This is a mid cap Zoom Info. Volume looks pretty good today. Leggett and Platt, big move off the low. You can see what the potential is here for these stocks that are changing trend. Robinhood changed trend recently, broke that downtrend, took off to the upside yesterday. Start the week, Monday, took off on Tuesday. Volume. All right, so mid caps, small caps. Let's see what the New York Stock Exchange. All right, you can see it. You see this pattern a lot off of these lows. You're seeing a lot of these stocks turn in the corner. That's pretty decent. $1.86 average true range. It's up 250 at the moment. A lot of these are turning the corner. Cano Health. What do they do? CANO. Not going to trade it. Just want to see what they do. Operates 172 medical care centers and medical practices for seniors. Florida, Texas, Nevada, Puerto Rico. Big volume today. Average, it looks like it trades about an average of 100,000 a day. I'm not really interested in stocks that trade low volume, but just noticing this pattern, many stocks are showing the same pattern. Beachbody, downtrend, starting to turn the corner. Looks like, I don't know. A lot of these have changed trends lately. Hovnanian, the builders, changing direction. This one had a lot of volume today. It's up 9.5%. It was up 12% earlier. Toll Brothers. Yeah, those look okay. Let's see what Royal Caribbean looks like. Royal Caribbean, the cruise lines trending. Some of the retail, Home Depot trending. What's Costco doing? Costco was off a little bit today, right? Inside of yesterday's price action, but looking bullish. All right, so we are making new lows. All right. Taking out some stops. Not going to do anything. If it does start to accelerate, we won't be buying puts at the low of the day. All right, so looking more and more like this top at 4,600. It's going to hold double top. If you look at the weekly, double top there. A high over here, 46.37. That was March of 2022. All right, so the reason why I don't think we're going to see a major move lower, at least for now, we've got 5 weeks of solid buying volume on the way up. Yeah, a little fade. It depends. Today's Wednesday, so by Friday, if we have more volume than we did in the previous 5 sessions, if we peak at like 14 billion, then I'd be more concerned. Of course, that's leaving 2 days for downside trading. So we can look at S&P tomorrow as well. 45.50 is a major level, and it's right below. You can see we have wicks along here. There's a lot of gamma in this area that should help to support price. If it doesn't, and we lose that, then we could be headed to 4,500 pretty quick. Okay. Okay, we got this volatility trigger right at the hedge wall, right at 45.45. That's down below. 45.50 is just above that. Key gamma strike. You can see all this volume right here, and that was on Tuesday. So that's grown a bit, I'm sure. And you can see this strike up here at 45.75. We're banging around in between these two. Looks like that's where we're going to stay. Okay, so any more selling, and this will turn out to be a bearish engulfing candle, which would be very bearish. And looking for the 21-day, 4,500. Again, if we lose 45.50, that would be the target. I'm not doing anything with puts at this point. It's the end of the day. We got 45 minutes to go. And it's Wednesday, the 6th of December. Okay, a lot of stocks pulling back. Mara, trying to go, Mara. We've got Coinbase pulling back. Bitcoin still in the top of yesterday's price action. Home Depot looks good. Home Depot, pretty strong. All right, we're making new lows. Home Depot. I'm thinking that we could see some consolidation on some of these stocks that have moved higher, like Home Depot. All right, we've got about 40 minutes to go. I'm just scanning through stocks. NIO hanging out just below $8. Looked like it might get going this morning. Royal Caribbean at the highs. Market's pulling back more. S&P pulling back more. New lows. VWAP down and to the right. ARM Holdings, bearish engulfing looking candle here. So this might be the highs for the week. What we put in this morning. No follow through. Looking for a bounce. Average true range is about $2.90. $2.90. It's off $2.29. So it's pretty close to done for the day, looks like.
Low tick alert -800.
All right, S&P heading lower. Okay, we're off 0.3%, 0.3%. It's 1-to-1 down volumes, not a lot of volume, but it is saying that there's more selling than buying. We do know that coming into the week, you were well aware that there was a possibility that this could be the case with the number of stocks trading above their 50-day in the red zone. Okay, it's still holding up fairly well. Still plenty of stocks, 82% of stocks are above their 50-day. 200-day had a little hook higher there for a while today. Consolidating just below this pivot high from late August. Okay, Bitcoin pulling back. NVIDIA. All right, so many of these stocks, no follow through. All right, so there you go. On Monday, it looked good for the bounce, but we said, let's wait for Tuesday. Tuesday was a nice little bounce. If you day traded it, fine. But today, we back gapped up and faded the entire day. So looking bearish. Let's see what the rest of these look like. Amazon. Okay, reversal. AMD. Okay, bearish engulfing candle on AMD looks like. SoFi fading, a good bet of the day. Uber hanging tough. All things considered, Uber's hanging near the highs for today. Just off the highs. Uber. Looking for a bounce. I never buy puts at the low of the day. We have faded all day long. So if you were thinking about the trade as a fade, you knew that S&P 4600 was resistance. and we dropped below VWAP and we never looked back all day. So you can't buy puts down here. Got to wait for a bounce at least.
Extreme low tickler. Low tickler minus 800.
Side here, the left third, in the middle of the pause period, and then the right side 6 months after the first cut. So is this pause period? It feels like everybody's rooting for cuts. It feels like maybe we should just be rooting for more pause.
That's a great way to put it, and we love this visual. I think that this is so important and so telling, and it does a lot to dispel some conventional wisdom that may be out there, right? I think that there is this sense, and from a lot of the investors that we speak to too, a lot of people are sort of sitting back on the sidelines, and that probably goes to that cash point too, and they're waiting for that first Fed cut. I think that this visual, and to your point, yeah, this looks back over the last 5 Fed hiking cycles, so it goes back to 1990. And it breaks it into exactly.
All right, VIX spiking. VIX. VIX is pretty low if you're thinking about anything. VIX calls probably. VXX. The only problem is that let me see what the theta is on these VXX. Theta is only a penny for January. What about end of year? It's only a penny a day.
Low tickler minus 800.
So we think that that's one area where you could see a little bit more of a catch-up trade, especially since real estate's been so beaten up over the last couple of years. And so we really do like that as an area where you still get to stay high in quality, but maybe increase your
VXX. You can see where it is. Starting to move higher. At the lows. Not really going to do, I don't want to do anything really at this point of the day. We got 30 minutes left to go. We've had a fade all day long, just a grind lower. Wasn't panic selling or anything like that, so not really that concerned at this point.
We do see opportunities in active management. So I think that there's some really cool offerings that we have. BINC, the BlackRock Flexible Income Fund, is an actively managed Core Plus product. And that's somewhere where you can actually pick your
Beyond Meat. All right, so a number of people have been talking about BYND. Anybody actually eat that Beyond Meat stuff? Chemicals?
Yeah, absolutely. Love that you love the fund. We do too. And I think that when we think about what attributes of quality were really rewarded this year, so the way that the fund is constructed and the way that we think about quality here is consistency of earnings, it's quality of balance sheet, and it is just other leverage factors as well. And I think that especially in an environment where we've seen interest rates a lot higher than people expected, and part of our base case and our macro outlook for next year is that they're going to stay a bit higher than people expect. We continue to expect that low leverage is going to be a rewarded factor next year. And so even though,
All right, still bear flags. Assume that we're going to move a bit lower. Snowflake pulling back. All right, starting to see some shorts cover now. That's why I don't like buying. Well, a number of reasons, but that's one of the reasons why you don't want to buy at the low of the day. Shorts will start to cover. We could conceivably bounce quite a bit. The place to short was when we lost VWAP earlier in the morning.
That you can maybe trade away a little bit of your upside potential in exchange for a more certain downside protection. I think that's been really appealing to investors. And so I almost think of this as another way to kind of move up with quality or another way to build in a little bit more resilience to your portfolio. So I think some investors are choosing maybe the QUAL path. And then for some who just want more of a defined outcome and a certainty of outcomes there, I think that these buffer ETFs and IBM in particular could be a great option.
So the idea here is you sacrifice a little bit of the upside if we really rip, but guard yourself to the downside.
Exactly.
Yeah, Chrissy, thanks for the walkthrough here of the funds. We appreciate it.
Thanks for having me.
You're the one who talked about a lot there, and a couple to put on our radar when it comes back. Let's trade some options. There's a trade in my Palantir, which has been struggling today, and a few days running now, and it's with the government. And then we'll come back to the airline story.
All right, a little short covering here. Pretty negative day today. Most stocks went sideways to slightly lower. Big fade. NVIDIA is down 1.5%, starting to bounce. 1.8%. Same with Netflix. All right, starting to see shorts cover now. All right, kind of a lackluster day. So taking profits first 15 minutes looks like was the play. Taking profits into this pop this morning. First 15 minutes, we just faded. So a lot of stocks faded with the indices, including IWM. So IWM briefly was the outperformer and then quickly succumbed to gravity back down to 184.
Third straight day of losses that we've seen for this one. An analyst sounded the alarm over the low data ownership or data ownership concerns from other customers due to the tie-in that Palantir passed with a $458 million contract that they have with the Army, which is set to end here in the next couple of weeks. Now, the head of their global communications told Barron's Monday that
Okay, another bear flag into the close. That wouldn't be good. Close at the low of the day. We're going to have a bearish engulfing candle most likely on the S&P. S&P most likely be a bearish engulfing. Yeah, it is already. Okay, so it is already bearish engulfing. So that would set up loss of the 45.50. If that goes, then 4,500 is the next level. That's a 21-day. So we'll look at that tomorrow.
strike put out in January, so about 44 days to expiration. So close, but always. Yeah, this is one that stuck out to me, but there was other ones. They were buying February, they were buying March puts also, really near term, short-term puts also on the slide that we're seeing today. But the 16 strike puts, they bought over 4,000 of those, average debit of 60 cents. The break even for this trade to the downside about 15.40.
Mara still hanging in there. Uber. Okay, that looks good. Uber. Uber hanging out. End of day, starting to go. Uber. Watch Uber. We should hold the 45.50 should hold, but if we don't hold 45.50, then I'd be looking for 4,500. That'd be the 21-day test. Okay. There's a lot of volume down there at 45.50. Uber. Starting to move higher. Uber. Bitcoin, we've had a nice week coming into today. We took a doji, but since Thursday of last week, we broke out above 38 and we ran up to 44 very quick.
Going through TSA that day. So air travel remains robust at this point. And then there was a big conference today where Delta kind of gave their inline guidance. They didn't really comment on the price of crude oil and what effect that's going to have on their margins. But if you see crude oil back below $70 a barrel, that's only a windfall. That's why you're seeing the airlines rally today. And if those TSA numbers stay pretty robust, that's definitely going to be a bonus for them also. Because expectations are low. You saw that slide from those highs in July into the end of October were pretty significant and steep. But we're seeing a nice resurgence here of about 28% since hitting about $30 about a month ago. But I saw some call buyers in here, but not near term. We're talking longer term options out in the April cycle. So you're giving yourself about 135 days. Trader came in and bought over 13,000 of the April 45 strike calls. Those are about $5 out of the money to the upside. An average debit of $1.25 on those. Step break even at 46 and a quarter over the next 4 months, about 17% above the current share price in there. Now remember, this was 49 in July, traded down to 30 the end of October. Now back.
Should bounce here, 45.50 area.
Watch oil. for these companies right now. And it should, especially when you start seeing bulls trade pile in, because it wasn't too long ago.
We got over 300 million in puts and 300 million in calls at this level, 45.50. So we should see a bounce. 45.50. Wow, to the penny. To the penny, 45.50.
This stock, follow rates, right? We've fallen 90 basis points since those highs at the end of October, where the 10-year yield was at 5%, right? The 30-year fixed mortgage rate got up to near 8%, now back down to 7.5 or 7.2%, and that'll continue to fall if rates stay on this trajectory lower, because it seems like they steepened up pretty quickly like an elevator, but falling slowly like an escalator at this point. But that'll be the key. UBS actually put a note out on Rocket today, and they assumed coverage with a sell rating and an $850 price target. The stock's kind of shaking that off right now. Mortgage apps rose 2.8%.
All right, we got 17 minutes to go.
So you're seeing some positive commentary on people getting back into the housing market, and that's what Rocket Mortgage needs at this point. But we saw some more longer dated calls traded on this name because the stock is still up, 48% so far year to date, even with this pop that we're seeing. So it's had a good run. But they were out there buying March 12 strike calls. They bought over 6,000 of those today. Average price of about only 40 cents. These are out of the money to the upside, low price stock. So we break even at 12.40 over the next 100 days, about 19% above the current share price in there. Now call volume 8 times annual daily average volume over the last 5 trading sessions. And interesting, Oliver, about 1,500 puts are traded on the day, right?
All right, we should bounce here. Starting to bounce. All right, Uber is looking good. Watch Uber. Uber. Looking for follow through. Looking for higher.
Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. There's no fear of missing out on that trend.
Available anytime, anywhere, on any device, for free. Empower your portfolio with Schwab.
45.50. They could also force the dealer's hand if they want to drop it below 45.50. Uber.
If you look at the technicals for this, for WTI, just the general price trends over the year, it does appear that if we were to breach 66,
Pilgrim's Pride pushed a bit higher in the last hour. Still looking for a pop. All right, so faded. After the first 15 minutes, we've just faded all day. VWAP staying down and to the right. So it's just the opposite of a bullish trade. VWAP down and to the right. Bullish trade, we want VWAP up and to the right. So we just kept moving down to support levels and through them, looking for 45.50 to hold. Bitcoin consolidating. I imagine there'd be a lot of people there thinking, okay, well, very bearish looking day. Maybe taking some profits off the table if they haven't already done so. Reducing their risk. Today was like a shot across the bow with this pretty bearish looking day. So not a bad idea. If we get a bounce tomorrow, you might want to reduce your exposure. There's no guarantees that Santa Claus will show up as a rally. Hope for the best, plan for the worst. Okay, let's see what's Uber doing. Uber. Okay. Not much going on, right? Beyond Meat looks like he wants to go. Beyond Meat.
See how that whole thing unfolds going into next year. You know, I mean, I think they have a price range where they have, and that's kind of where they're going to kind of maintain what they feel is a comfortable margin, and then also try to control to some degree the global supply. And but the U.S. is still a wild card in that scenario. Production here continues to go to record levels, and exportation is ramping up. So there's, I think they still have a pretty decent control of the market, but not as much control as they did maybe even a few years ago. And now with the war and other things, we'll see. It's there's probably a lot of negotiations going on behind the scenes as to how to influence the markets, particularly with what's taking place from a global perspective.
Yeah, all right, nice. Good job, Stan. Perspective too for the whole energy complex is just getting slapped right now. Pandemic, man.
Beyond Meat looking good.
Developing story speaking of the price of oil and gas. The Motor Trend truck of the year is a
Chevy Colorado vehicle, a mid-size Chevy Colorado. I'm not too familiar with like the truck world, but I know. Yeah, well, I do know that it's a little bit smaller than the F-150. So hey, this is really interesting because to see a good old-fashioned American-made vehicle that tops this list, I think no surprise when you're looking at the trucking space, but
S&P hanging out 45.50 support. The significance is pretty important because we also have the spiders with support same level, 450. So doesn't mean we have to stop here, but we're definitely watching it. 450, 450, 455. All right, we're at 454.50, 454.60. Okay.
Low ticker at -800.
of U.S.'s total vehicle sales in most given years, small and mid-sized pickup trucks account for another 4 or 5%. And what's been a really
13 days to cover on Beyond Meat. That looks pretty good, David. I think I called you John earlier. I think I did. Beyond Meat. All right, we continue to bang along this area.
Born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and best accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Looking for a bounce. Looking for the bounce. Let's see, BYND. BYND.
Afternoon, guys. Good to see you again, Kathy. Same to you, Mr. Kleintown. Jeff, gonna start it here because it seems like the action as far as central banks go this week is abroad. We don't really get a lot of Fed commentary here right now. What's driving the overall narrative for the rest of the world's path towards cuts?
We heard from the Bank of Canada today. They held interest rates steady. That's no surprise at 5%. That's the highest level in 22 years for Canada. They did acknowledge the economy is slowing down, and they eliminated a line from the October decision that said inflationary risks have increased. So they cut that out, and they acknowledged that the economy is
BYND.
unemployment is rising in Canada. They've seen a month where they had job losses over the last few months. So it's likely they shift to rate cuts by the end of, I think, probably the first quarter of next year. I think the market's pricing about a 60% chance of a rate cut by the BOC at that March meeting. My favorite leading indicator of inflation, the PMI Manufacturing Output Prices Index survey of what manufacturers are charging their customers points to inflation at or below the Bank of Canada's 2% target over the coming 6 months. So I think they're probably right on track for some rate cuts beginning maybe around the end of the first quarter.
Okay. So we are on our way. So then, pause in the first step to the cut. You know, a lot of those charts, we've been looking at that chart for a bunch of different countries and regions.
S&P, Spiders, SPX. All right, big bearish engulfing candle. So a lot of people have been making a big deal out of that. Okay, so we're below 45.50 for now. 45.40 is the next level below that. Three minutes to go. 3 minutes to go.
We should be watching along the curve as the most telling section right now, Kathy.
Yeah, I would focus in on that 2-year area because that's where you really see a lot of the activity related to pricing and Fed cuts over the next year and a half, 2 years. Now, I think you see a lot of volatility there, but again, I think the market has 6 quarter-point cuts priced in, fairly rapid, and this is a Fed that's been reluctant to even initiate rate cuts, let alone, move rapidly. So we're bullish the long end because we think the Fed will actually be slow in their reaction function, and that will keep the momentum on the downside. Inflation, but I worry big move already.
Got it. Okay. And I know that the next year outlook is out from the team, and bond is still looking to come down a bit, as you mentioned that. Jeff, as we are assessing the whole global economy as a whole, we've been talking a lot today about energy prices getting walloped. I'm curious how you view that as a message about some of the other economies and maybe lackluster demand.
Sure. I think there were wide expectations that supply and demand would balance out with regard to oil in the second half of this year. And that hasn't happened. Despite the supply cuts, we still seem to be in a fairly weak, lackluster demand situation, as we can see. China's economy isn't roaring back in any big way, and still is suffering.
All right, that's a wrap. Should see a rally into the close, perhaps. Closing bell. All right, folks, I got to get out of here. I got a hard stop. Have a great evening, everyone. Take care. I know it's been very boring. It's been a short since the beginning of the day, so it is what it is. We'll see you in the morning. Take care. Ciao.